Okay. Good evening, everyone. Welcome to Byju's Exam Prep IAS. This is Sham Kagur here. Now, before I start the discussion, if there is no issue with the sound, can you please give me a thumbs up so that we can start the discussion for the day? Done. Okay. Thanks a lot. So, yesterday, what we have discussed, we started with a concept of Basel guidelines. Okay, Basel guidelines. In Basel guidelines, what we have discussed in Basel guidelines, certain basic concepts. Tier 1 capital, tier 2 capital. Again, keep it very simple. Many of you are saying, sir, economics is very difficult for me. It becomes very difficult because you want to learn everything in detail. Please don't do that. Trust me when I say this. UPSC will not ask you as per the PhD level. Please don't do that. Keep it very simple. So for a bank, they need to maintain capital. For what reason they are supposed to maintain capital? They are supposed to maintain capital because they might incur losses, and to adjust for the losses, right, they will maintain capital. It is divided into two parts: tier 1 and tier 2. Tier 1 and tier 2. And in case of tier 1, right, I've given you certain examples, right? Additional tier 1 bond, 81, right? Example is 81. So the bank will collect the capital, and the bank relies more on 81, or let's say tier 1, to absorb losses. Then the three types of risk, right? And because of the three types of risk, bank might incur a loss. Then we have discussed a capital adequacy ratio. What is a capital adequacy ratio? What is the minimum amount of a capital? Minimum amount of a capital that the bank should maintain in order to absorb losses. That is basically capital adequacy ratio. Then we have discussed Basel 1, Basel 2, Basel 3. Basel 1, credit risk, capital adequacy ratio was implemented. Basel 2, three pillar approach was there, because from one risk we shifted to three risks, right? So three pillar approach. Then we have implemented Basel 3, three risks are there, three pillar approach is there. But in addition to that, now we are supposed to have more of tier 1 capital. We are supposed to have capital conservation buffer, liquidity coverage ratio is also there, etc. That is Basel 3. After that, we have discussed a concept of cooperative banking, idea of cooperative banking in India. Cooperatives are basically group of at least 10 adults who have come together to achieve a common objective. For example, I told you we have cooperatives in housing, we have cooperatives in banking, we have cooperatives in sugar, etc. etc. In the context of cooperating, there was one issue, that was the problem of dual regulation, right? Because as per the cooperative banks, right, cooperatives are registered under the register of cooperatives. Elections are conducted for the board of directors, or the, let's say, management. The problem was the management may not be having any kind of experts in the banking sector. That is the precise reason there was an issue of dual regulation. Government of India, to address the dual regulation, provide more and more the power to the Reserve Bank of India, has amended RBI Act. Banking Regulation Act has provided more powers to Reserve Bank of India. We have discussed that. Then we started with the concept of regional rural banks, RRBs, regional rural banks. We discussed certain points and then we stopped the discussion. Let's continue from there. Regional rural banks, if you remember, yesterday I told you, these are present especially in the rural part of India. The name itself is self-explanatory. These are present in the rural parts of India, right? The object was very simple. During 1970s, if you remember, I'd started with the same idea. During 1970s, agriculture sector wanted to get access to loans credit from institutions. But at that point of time, the spread of the banking sector in the villages, that is the rural part, was very less. The farmers wanted to take loans. The smaller industries wanted to take loans. Right, for rural development, or let's say even certain tribal population wanted to get access to institutional loans. But the absence of these institutions made it very, very difficult. Looking at all of this, based on the recommendations of Narsimham Committee, Government of India passed regional, that is Regional Rural Act, Regional Rural Bank Act, and after this, we started promoting setting up of more and more regional rural banks. Next important point, whenever we talk about regional rural banks, we would ask certain banks. For example, right, I'll show you examples, please have patience. We would simply ask State Bank of India to open branches in the regional part of India. We would simply ask State Bank of India to open branches in the villages. Now have a look at this. Please have a look at this and tell me, if you are the manager of SBI, if you are the, let's say, CMD of SBI, will you be investing all the money to open the regional rural banks? Think of it. Right? Do you think it will work in your favor? You'll be able to collect more deposits? Will you be able to give more loans and earn interest in the villages? No. And in addition to this, there was one more condition. I hope you remember this condition. The regional rural banks were allowed to operate only in 1 or 2 districts. That's it. They will not be allowed to work in beyond these 1 or 2 districts. They will have to open the branches within 1 or 2 districts. Now, obviously, if you ask SBI to open a regional rural bank, SBI will simply say no. If you ask any other bank, of course, they will look at the situation and say no. And that is a precise reason, very important point. Whenever the regional rural banks were set up, please have a look at this. I'll come back to this. These are some of the regional rural banks. These are some of the regional rural banks. Should you buy heart this? No. Please do not buy heart the list. UPSC will not ask you the list. Don't waste your time. Now, some of these regional rural banks which are owned by, let's say, State Bank of India. I've given examples. Have a look at this. Andhra Pradesh Gramina Vikasa Bank, Arunachal Pradesh Rural Bank, and some of them which are owned by Punjab National Bank, Sarva Haryana Gramina Bank, Himachal Pradesh Gramina Bank, etc. Now, what is the whole idea? You are asking SBI to open a regional rural bank which will operate only in 1 or 2 districts. SBI, of course, will simply say, no, I don't want to invest so much amount of money. Open branches where they will be asked to work only in 1 or 2 districts. And that is the precise reason. The investment that is done in case of starting a regional rural bank, right? The total amount of capital that is invested in starting regional rural bank would come from 3 sources. One is the central government. So central government said, okay, I will also provide certain assistance here. Second one will be sponsoring bank. Second one will be sponsoring bank. Now, what do you mean by sponsor bank? Please understand this. Let me take one example. Andhra Pradesh Gramina Vikasa Bank. This Andhra Pradesh Gramina Vikasa Bank is owned by State Bank of India. So the State Bank of India will be referred to as sponsor bank. That is basically the bank which has started this RRB. Any difficulty in understanding this? Any difficulty in understanding the term sponsor bank? Please do let me know. Right, the State Bank of India is a sponsor bank to 14 RRBs. PNB is a sponsor bank for many of the RRBs. So the bank which will make an investment, start an RRB, that bank will be referred to as sponsor bank. So central government would provide certain capital. Sponsor bank will also make certain investment. In addition to that, even the state government will also make certain investment. So the ownership that will be there as per the investment will be, central government will have 50% ownership in an RRB. Sponsoring bank will have 35% ownership in an RRB. And the state government will have 15% ownership in RRBs. Is it okay? Central government will have 50% ownership. The sponsoring bank will have 35% of the stake, and the state government will also have 15% ownership in these RRBs. Now, this is basically the idea of RRB, sponsoring bank, ownership, examples of RRBs. What are the reasons why we have promoted the idea of RRBs? To promote development in the rural economy. To provide a credit, that is agriculture sector should be able to get access to the loans in the rural part of India. Village industries should also be able to get loans. Fourth one, to reduce the dependency of the weaker sections of the society from taking a loan from informal sources. Do you remember the concept that I've told you some time ago? In case of rural part of India, you can take a loan from a formal source as well as informal sources. Do you remember this? Formal as well as informal. But what is a very important difference? When you take a loan from a formal source, rate of interest is very low. For example, you take a loan from SBI, you take a loan from Canara Bank, you take a loan from Regional Rural Bank. But on the other hand, if you take a loan from a money lender, friends and family, rate of interest will be very, very high. Right? So, in order to ensure that there is no higher dependency of the rural population, especially weaker sections, poor population on money lenders, we want to reduce that dependency. And finally, to make the backward as well as tribal regions economically better by opening more and more branches in those regions. So these are some of the objectives with which the RRBs have been promoted by the government. Now, what are the features? Point number one, these are sponsored by commercial banks. These are sponsored by commercial banks. And do you remember what is the definition of a commercial bank? I hope you understand. Do you remember what is the definition of a commercial bank? Yesterday I've told you this point. In fact, I went to the third or fourth slide to show you what is the meaning of a commercial bank. Any bank that will come under the coverage, of Banking Regulation Act automatically is called as a commercial bank. So sponsored by commercial banks in India. They will be present in one or two districts for efficient functioning. Now, some of you will say, sir, why one or two districts? Argument is simple here. Should you target cities to provide all these services as a regional rural bank, or should you target villages? Think of it. Should you start opening the branches in cities from one state to another state to another state, or should you target only the rural part? That is the precise reason the government of India has a regulation. You should be present only within one or two districts. Beyond that, don't spread. Within these one or two districts, just be present, provide the services. Management of these banks will also be one of the functions that will come under the sponsoring bank. That is the sponsoring bank. For example, SBI is a sponsoring bank for Andhra Pradesh Gramina Vikas Bank. Apart from making investment, putting capital to operate the RRB, SBI will also appoint the chairman, will also appoint a certain very, very important personnel who will take care of operations of the bank. And RRBs will be required to provide 75% of their total credit in the form of PSL. Any problem with this? 75% of their total credit they will have to provide under the tool called as Priority Sector Lending, PSL. Right, so these are certain very important features which are associated with regional rural banks. Now, what are the concerns or issues regarding RRBs? What are the concerns or issues regarding RRBs? Point number one, imagine you start operating an RRB. I hope you understand. You start operating a regional rural bank. A regional rural bank should be present in one or two districts, within one or two districts. Point number one, will you be able to generate more and more deposits within these two districts? Think of it. Will you be able to generate more and more deposits within these two districts? Not possible. Many of the times it will not be possible. It can be done, but in many cases it has not happened. Why? What if the cost that you're incurring to provide all the services, the cost is much higher compared to whatever deposit or money or revenue you can generate from providing all these services? So first problem was, because they will have to operate within one or two districts, what is the capacity to collect deposits? The potential to collect a deposit was limited. First point. Second point is the non-performing assets were very, very high, and the losses incurred, right, were also very high for RRBs. And there is a reason for it. Many of you will simply say, sir, why NPAs in case of RRBs are higher? Why the losses are higher? My dear, what is covered under priority sector lending? What is covered under priority sector lending? Right, agriculture sector, mainly agriculture sector. Apart from this, there are many other sectors. I'm only saying. Apart from this, there are many other sectors. And how many of you think that agriculture sector is very, very profitable in India? Think of it. How many of you are under the impression that agriculture sector is very profitable in India? All those who are there in agriculture sector are earning huge amount of profit. Absolutely no. We are almost very near to the onset of the monsoon now. Right? Imagine there is a delay in onset of the monsoon. Then automatically you will come across articles which says the delayed onset of the monsoon affects cultivation. Or right, a very high amount of monsoon will also affect cultivation, etc., etc. And apart from the agriculture sector, there is MSME. MSME has its own set of problems. We'll discuss that, don't worry. Right, there is MSME, weaker sections of society is there, etc. MSMEs also have their own set of problems. What are the problems of MSMEs? We will discuss that separately, please don't worry. So the non-performing assets as well as the losses incurred by the RRBs are also very higher. And in addition to this, they within these one or two districts, they have also opened a lot of more and more number of branches. Now, on one side, more and more number of branches have been opened, cost of operations have increased, non-performing assets are very high, the NPAs, that is NPAs are very high, and the deposits, they are not able to collect more and more. As a result of all of this, don't you think a large number of RRBs will be incurring continuously more and more losses? And that is exactly what has happened. That is exactly what has happened in the context of India. And what is the solution to all of this? The government of India, which is the majority owner in the RRB, majority means 50% is there. The majority owner, that's the government of India, has started merging RRBs. It has started merging these multiple RRBs. Number of RRBs in case of India have declined, have reduced. Done. So these are certain very important points regarding the concept of RRBs. And very recently, RBI says we will promote listing of the RRBs. I hope you understand. We will promote listing. Listing means RRBs now will be allowed to issue shares in the market to collect capital. RRBs now will be allowed to sell the shares in the market to collect the capital. Done. So this is basically the discussion regarding the RRB. Any difficulty? Can I go to the next one? Can I go to the next concept? Repeat point 1. Slow mobilization of deposits. Because these RRBs will have to be present in very small number of areas, they will not be able to generate more deposits. They will not be able to generate more deposits or collect more deposits. That's it. Okay. Until now, RRBs don't issue shares? No. RRB's ownership is tightly held between three stakeholders. RRB's ownership is held tightly between three stakeholders: center, state, and the sponsoring bank. Okay. Okay, let's go forward. Again, this is a list that I've taken. The list that I've taken, don't by heart the list. Many of you are asking, sir, this bank is present here, that bank is present here, right? So many districts. Don't by heart the list. Not at all needed for UPSC. Do not focus on unnecessary things. This is my advice to you. Do not focus on unnecessary things. UPSC will never test you there. Okay. Now, next concept is the idea of a NABFID. Current affairs. Current affairs. NABFID stands for National Bank for Financing Infrastructure Development. NABFID. But what is this idea for NABFID? Let me give you a background here. Let me give you a certain background. What is the idea for NABFID? There is a concept called as Development Finance Institution. Development Finance Institutions. In short, these are called as DFIs. Development Financial Institutions. In short, these are called as DFIs. Now, what is this idea for DFI? Let me ask you a very simple question. Imagine you are a developer. You want to develop a tunnel. You want to construct one tunnel. You want to construct airport. You want to construct a highway. Now, simple question to all of you. How many of you think that you will require small amount of money to construct any one of these projects? Forget all of them. Even if you want to construct only one of these, do you think that you will require small amount of money? Absolutely no. Thousands of crores of rupees is required. Point one. Point two. How many of you will take money from your pocket and invest and develop these projects? Think of it. How many of you will simply say, sir, yes, I have a lot of money, right? I will invest my own money, develop these projects. You will not do that. So what you will do now? In order to develop these projects, you will go to a bank. You want to take a loan from a bank. But also look at the flip side to this. Do you think all the banks in India will have sufficient capacity to provide such large loans? I will use the term large loan here. Large loan means value of loan is very high. Do you think all the banks in India can provide large value of loans? Of course, no. There is one concept, DFI, Development Finance Institutions. Development Finance Institutions. I'll give you an example. Have you heard of Exim Bank? Let me know. Have you heard of Exim Bank, Export Import Bank? There is one more, NABARD. Right? These examples are IDBI earlier, not today. ICICI earlier, not today. Whatever examples I'm telling you now, NABARD, Exim, ICICI, IDBI, etc. These are examples of development finance institutions. And whenever you use the term development finance institutions, what is the role of these DFIs? DFIs would simply promote development of infrastructure projects. They would simply provide large value loans for development of infrastructure projects. That was basically the role of DFIs, Development Finance Institutions. And in case of India, point is very simple. There is a huge requirement of development of infrastructure. Can I give a very simple example here? Government of India says they want to make Indian economy worth $5 trillion. They want to make Indian economy worth $5 trillion. Although initially it was 24, 25, now it has been pushed back to 26. But to become a 5 trillion economy, to become a value of $5 trillion, don't you think you need to develop a lot of infrastructure in India? And in order to develop a lot of infrastructure, you require institutions which will provide more and more large value of loans. More and more institutions should be there which will provide large value loans in order to promote this kind of a lending activity. And please understand next point as well. These kind of institutions, that is generally referred to as a DFI, they are not a normal bank. These are not normal banks. For example, what do you mean by this, sir? ICICI today, I'm talking about ICICI. If you talk about ICICI today, can I simply say it is a normal bank? Normal bank in the sense, people, that is individuals such as you and me, we can go to ICICI, keep deposits, take loans, open bank accounts, etc., etc., etc. Any difficulty in understanding this? A bank, I'm talking about a bank, by the way. But earlier when ICICI was established, When earlier it was actually established, ICICI was working like a DFI. It was a DFI. And whenever any institution is there which is a DFI, they will not provide these kind of banking services. Right? What do you mean by banking services? Right? For example, the latest example of a DFI is what? NABFID, National Bank for Financing Infrastructure Development. Can you go to NABFID, open a savings account here? Right? Understand this. This will not provide banking services to you. Can you walk into a NABFID and start, right, taking a receipt, or let's say taking a form and fill up the form and say, I want to open a bank account here? Absolutely no. DFIs do not provide these kind of banking services. What they will do is they will borrow from others. Right? For example, DFIs may issue bonds in the market. Is it okay? DFIs may issue bonds in the market, collect money, that is borrow money from the market, and provide loans for development of infrastructure. Does it make sense to you? Please do let me know. Right? Rather than collecting deposits from you, me, just like any bank does, the DFIs generally what they do is they have different sources. Right? For example, they will issue bonds, long tenure bonds, borrow from the market, use that money to give loans for development of infrastructure projects. This is how generally the DFI's business model will work. And in order to promote the functioning of more and more DFIs in India, Government of India now has introduced a new model, new institute, National Bank for Financing Infrastructure Development. Now, in case of National Bank for Financing Infrastructure Development, right now, 100% of NABFID will be owned by Government of India. Please have a look at this. 100% of the ownership of NABFID is there with the Government of India, and Government of India in a document says after certain years, how many years? You also don't know, I also don't know. Government is yet to decide. After certain number of years, we will reduce the ownership in the NABFID to 26%, which means, let's say hypothetically, 26% Government of India will keep the ownership with itself. Remaining 74%, it will sell it in the market. It will sell it to, let's say, anybody in the market. So this is a proposal that is right now 100% is there, but after certain time period, government will sell off 74%, keep 26% with itself. Point number 2. Point number 3. This is nothing but a development financial institute. Right? When you're asking, is it a DFI? Of course, yes. It is a developmental financial institute itself. Point number 4. If Government of India has opened a DFI, can we allow the private sector? Yes, Government of India in a document says if the private sector also wants to open DFIs, they can go to RBI, apply for the license, take the license, and right basically start providing DFI services. Point number 5. What are the functions of NABFID? What are the functions of NABFID? The functions are very simple. Point number 1. It will provide loans for infrastructure projects. NABFID will provide loans for infrastructure projects. Point number 2. NABFID will also promote private sector participation, private sector investment in lot of the infrastructure projects. First one, second one. Third point, if there is a particular project and there is a dispute, right, one of the ministry is not giving clearances, or there is a dispute between one ministry with another ministry, the NABFID will try to conduct negotiations, and whatever is the issue regarding this project, they will try to get it resolved. Point number 3, it will also facilitate foreign sector, foreign investor participation in development of infrastructure projects, investment in these infrastructure projects in India. And finally, it will also provide consultancy services. It will also provide consultancy services. These are the 5 very important the functions which have been given by the government to National Bank for financing infrastructure development. These are very simple, not complicated. Let me repeat it. One, they will provide loans. They will provide financing. Second, they will also promote private sector participation in India so that more and more financing will be done in infrastructure project. Third, not just the domestic private sector investment, they will also attract a lot of foreign investment in development of infrastructure. Fourth one, if there's a dispute regarding a project, ministries are involved, NABFID will try to negotiate with them, negotiate in the sense, have to consult them and try to resolve those disputes. And the fifth one, it will also provide consultancy services for development of such infrastructure projects. Right, so these are the 5 very important functions which have been provided by the government or allocated by the government to functioning of NABFID. Done? Now, what are the advantages? What are the advantages, benefits of NABFID? Point number 1. Whenever you have discussed the idea of a infrastructure development, it is always associated with the idea of a multiplier effect. Idea of multiplier effect. Now, what is this idea of a multiplier effect? Please understand this carefully. Multiplier effect simply means with increase of investment by 1 rupee, with investment increasing by 1 rupee, GDP will increase by how much? I'll repeat the statement here. Understand this carefully. Multiplier effect simply means whenever your expenditure or investment will rise up by, let's say, 1%, as a result of this, what is the change observed in the GDP? That is called as a multiplier effect. And if you ask me, and many of you, as I'm saying, many of you started typing, how it will contribute to GDP? Do remember the concept of virtuous cycle? Let me check. Do you remember the concept of virtuous cycle? If you invest 1 rupee, don't you think that will contribute to rise in the GDP? For example, I'll give you this idea. Please have a look at this. Example 1 and example 2. In example 1, investment will increase by 1 rupee. GDP will increase by 2 rupees. And second example, investment will increase by 1 rupee. GDP will increase by 5 rupees. Now you think like an economist. Tell me, would you prefer example 1 or example 2? This is very simple, by the way. Not at all very difficult. And don't make a mistake here also. Right? And as expected, as I was fearing, many of you are saying example 1. My dear, 1 rupee you are investing, GDP increases by 2 rupee. 1 rupee you are investing, GDP increases by 5 rupee. You prefer the first example. How? Why? Don't you think for every rupee that you're investing, if GDP increases by a larger number, much higher number, that will be good for Indian economy? Right? So example 2 is always better. Any problem in this? Example 2 is always better. Again, these are all rational things. And I'm actually surprised that some of you are asking why. I want GDP to increase by 2 rupee, not by 5 rupee. Can you understand what is your argument? Your argument is, I want the GDP to increase by 2 rupee, not by 5 rupee. Don't you think there itself you are making a very grave mistake? Just think of it always. Right? So multiplier effect simply means with a change, right? With a change in investment by 1 rupee, what is the change in the GDP? That is called as a multiplier effect. And higher the multiplier effect, it is always preferred. Higher the multiplier effect, it is always preferred. And as per various surveys, please remember this, as per various surveys, whenever you invest in infrastructure, multiplier effect is somewhere in the range of 3 to 5%. Whenever you invest in, right, the infrastructure, the multiplier effect is in the range of 3 to 5%. Right? So it has a very good multiplier effect. And don't you think, looking at this itself, government of India, right, the current government, previous governments, etc., they have started investing more and more in infrastructure. Apply to the real life now. Simply apply to the real economy. Right? Can I give you very, very simple examples? Right? Sagarmala project, development of infrastructure. Right? The Mumbai-Delhi expressway. Right? A multiplier effect, infrastructure. Bangalore-Mysore expressway, infrastructure, etc., etc. How many infrastructure project examples you want? So one, infrastructure financing has a multiplier effect. That is what we want as an outcome. Second, burden on the banking sector automatically will come down, right? Because please understand this, if you are a project developer and if there is one institute that will provide a large value of loans to you, automatically your dependency on the banking sector, will it come down or not? Please do let me know. Will it automatically come down or not? Of course, yes. Rather than going to the bank, now you might start going to a DFI, start taking loans, start investing. And here, I want to introduce one more concept to you people. Understand this very carefully. Understand this concept very carefully. There is a term called as asset liability mismatch. There is a term called as asset liability mismatch. Now, what is this concept of asset liability mismatch? I'll start using the term short form of this, ALM. Now, please tell me, for a bank, can I simply say loan is an asset? For a bank, I repeat, for a bank, loan is an asset. Deposit is a liability. Deposit is a liability. Let's start. Here is a bank. The bank will collect, let's say, 100 rupees from you. You're a depositor. You'll keep 100 rupees with the bank. Now, assuming no reserve ratio, nothing else, the bank will take the 100 rupee, give it as a loan to a company. Give it as a loan to a company for a period of 10 years. For a period of 10 years. Now, understand this very carefully. You have kept a deposit with the bank, let's say for 1 year. The bank has taken this money, given it as a loan for a duration of how much? 10 years. Now, please look at this. The bank has to repay this deposit to you after 1 year, but it will recollect the 100 rupee for 10 years. Can I call this as asset liability mismatch? Please have a look at it. Can I call this situation as asset liability mismatch or not? That is, the tenure, the time period for both assets and liabilities are different. And some of you might ask me, what is the problem if there is ALM? What is the problem? Problem is very simple. After 1 year, when you go to the bank, can the bank simply say, I will not allow you to withdraw 100 rupee because I have given the 100 rupee to a company? Will you accept that? No. Which means there will be a lot of pressure on the liquidity of the bank. The bank has to maintain a lot of cash with them so that when you come to them, they will have money to allow you to withdraw money. Point number one. And point number two, have a look at this. The bank will recollect it. Bank will simply recollect it in 10 years, but they will have to repay this 100 rupee after 1 year. Which means after 1 year, let's say you go to the bank, bank wants to give that 100 rupee to you, they will collect 100 rupee from someone else. What if interest rates in the 1 year has increased? Tell me now. What if in that 1 year, interest rates have increased? That is, you kept FD with the bank, interest rate was 5%. After 1 year, when you go to the bank in order to give you 100 rupee will collect a deposit, let's say another FD from one more customer and give the 100 rupee to you. But what if the interest rate after 1 year is 6%? Don't you think that will affect the profitability of the banks? Think of it. Don't you think that will affect the profitability of the bank? Because when you keep FD, they will simply say for this tenure, this is the rate of interest. And interest rates, if they keep on increasing like this, the interest mismatch will also have an impact on the revenues of the bank, right? So liquidity, they will have to maintain. Interest rate will also have an impact on the banking sector, right? That is the impact of asset liability mismatch. That is the impact of asset liability mismatch. So very difficult. Are Baba. It's very simple idea. A bank will collect loans. I'm sorry, bank will collect deposits. Deposits are supposed to be repaid by the bank, right? That is a liability. On the other hand, the bank will give it as a loan. That is asset for a bank. Right now, what the bank has done is they have collected the money for 1 year from you and they've given the loan for 10 years to another company. Simple. Don't you think the tenure of the asset and liability, don't you think both are different? Despite writing everything, you're asking me. Right? So basically here, they have taken the money from you for 1 year. They are giving the loan for 10 years. The tenure of the asset is different. The tenure of the loan, that is basically asset is different, and the tenure of the deposit is different. That is called as asset liability mismatch, right? And please understand, now does it make a sense if I say generally long term loans are given for infrastructure development? Let me know, right? Infrastructure development, don't you think they will take long term loans? For example, you want to construct a tunnel, will you take loan for 1 year? Think of it. And some of you will now ask me why. Why should I not take loan for 1 year for construction of tunnel? You do that. Within 6 months, you will close the company. Okay, that is basically the idea. So infrastructure development, they will take loan for longer duration. And if you go to a bank and take a loan, more and more loan, if all the developers will approach bank, don't you think that will cause a lot of asset liability mismatch issues with the bank? Right? That is basically what I'm trying to convey here. It will reduce the burden on the banking sector. Next one, it is expected to promote virtuous cycle in the economy. Right? These are some of the advantages associated with NABFID. Now, what are the concerns or issues associated with functioning of NABFID? One, NABFID will provide loans for development of infrastructure projects. That's a function, by the way. But to develop infrastructure project, you require land acquisition. And to acquire land in India, tell me how many of you believe that it is very easy to acquire land in India? And if you simply say yes, it simply means you are not reading current affairs, because I can give you many examples where companies, government, etc. have faced issues with land acquisition. For example, one of the important projects in India, bullet train project, is getting delayed is land acquisition. I understand one of the important reasons why bullet train project is getting delayed is land acquisition itself. I'll give you one more example. In the state of Kerala, this was there in the current affairs last year. In the case of Kerala, last year there was a proposal called as a Silver Line project. Right? I hope you have at least heard of it. The government of Kerala proposed something called as a Silver Line project, one of the infrastructure projects. People opposed and said, we will not allow you to acquire land. Project was dropped. Or the best example that you must have come across, Tata Nano project. Tata Nano project. Where was it initially proposed? Tata Nano project was proposed in West Bengal. Later, because of the issues related to land acquisition, it was shifted to Gujarat. So I hope you understand, right? Again and again, this will keep on cropping up. This term, land acquisition problem, will keep on appearing very often. Don't keep on asking why, any example, etc., etc. Land acquisition, very difficult in India. So first issue is land acquisition is not easy. So what will happen if NABFID will provide loan to a company, developer for a project, land acquisition is getting stuck up. Don't you think NABFID will also face the same issue that the banks are facing? Second, on what basis the NABFID will find what are bankable infrastructure projects? A technical term. On what basis the NABFID will be able to identify what are bankable infrastructure projects? What do you mean by a term bankable infrastructure project? Whenever you develop infrastructure project, is there any risk associated with the project? Think of it and let me know. I'll give you examples. Whenever you are developing an infrastructure project, will you face any kind of a risk associated with the project? Answer is yes, by the way. Can I give you example? Imagine you want to construct a road. You want to construct a road. Point number one. First kind of a risk that you'll face is land acquisition. Done? First kind of issue that you'll face is land acquisition. That is a risk for you, by the way. Second one, right? What about credit? Is there an issue getting cheaper credit or not? Think of it. Will you face one issue that is access to credit, that is a loan at a lower rate of interest? That's also very important. Don't simply say, yes, sir, I can take a loan. My dear, what if you take a loan where rate of interest is so high that whatever revenue you are earning, you will have to use it to repay the loan? Then where is your profit? Where is your profit, by the way? What about access to raw materials? Tell me, what about access to raw materials? Access to labor? Can I give you a very, very prime example? All of you will agree with me. Imagine you want to construct this road. There is a pandemic and government of India has imposed lockdown. Tell me now. Anybody disagrees? Please do let me know. Government has imposed a lockdown. What will happen to transportation of raw materials? And worst case scenario, what if the raw material that you require, one of them is supposed to be imported? All I'm trying to convey is very simple here. Whenever you construct any infrastructure project, there is always a risk. There is always a risk associated. And risk is not going to come from only one area. There will be multiple areas from where you will face the risk. That is basically the point I'm trying to make here. So this point is very clear to all of you. Development of infrastructure projects is associated with lot of risks. Now, whenever you talk about a bankable project, when you use the term bankable project, you have already measured what kind of risks you will be facing. Understand this. The meaning of the term bankable project means you already know what kind of risk you might be facing in the future and you have a plan to address the risk. Any issue with this? Right? Let me know. What is the meaning of the term bankable infrastructure project? You as a developer, you know what kind of risk you are going to face and you have a plan to reduce the risk that you're facing. These are called as a bankable infrastructure projects. Now, on what basis NABFID will find out which are bankable infrastructure projects? Right? That is one more very important concern. Third very important concern, bond markets are not very well developed in India. And why? What is the meaning of this? If you remember earlier, I told you NABFID or any for that matter DFIs, developmental financial institutes, they can go to the bond market, issue the bonds and collect, that is borrow money and use it to give loans for infrastructure development. In case of India, bond market is not very well developed. I repeat, in case of India, bond markets are not very well developed. Now, if the bond markets are not very well developed, don't you think NABFID will might rather than saying will, NABFID might find it very difficult to issue bonds, or for that matter any DFI which will be implemented now might find it very difficult to raise the money from the market through the bond market. That is the third concern. And the fourth concern is NABFID will provide loans for infrastructure development. What if the case will be taken up in the Supreme Court? There's an infrastructure project. Somebody will go to Supreme Court, file a case. Right? One of the government ministries will withhold approval, will simply issue an order, right, putting a stay on a particular infrastructure project. Then NABFID's investments or the loans will again get stuck up in the market. So these are some of the concerns or issues related to functioning of NABFID. Done? Right, so basically these are the benefits, these are some of the concerns. Third point, bond market. My dear, here is a NABFID. Here is a NABFID. I said, for that matter, any DFI will go to the bond market, issue bonds, collect money, borrow money, and provide loans for infrastructure projects. I am saying bond market is not very well developed in India. Can you understand the term not very well developed? Otherwise, I'll give you a very simple example. You tell me, do you think electric vehicle market in India is very well developed? At least let me check whether you're reading newspapers or not. Right? Electric vehicle market is very well developed. No, that is what I'm trying to say here also. Bond markets are not very well developed in India, which means the DFIs may find it very difficult to borrow money by issuing bonds, which will affect their lending activity. That is basically the point that I was trying to make here. Okay, done. Right, so these are some of the concerns as well as the advantages related to the functioning of NABFID. Now, let me go to the next concept. Small Finance Bank, SFB. Now, by the way, let me ask you a very simple question. All of you, I'm pretty sure, all of you have downloaded yesterday's PPT. Let me know. All of you have downloaded yesterday's PPT. How many of you have read the article that had given in that PPT on payment banks? How many of you have read the article that I've given in that particular PPT on payment banks, newspaper cutting on the payment banks? Right? You will not read. Many of you are saying no. What are you waiting for? What is your, why are you waiting? What is the reason? Any particular reason? In fact, please read today's newspapers also. Right? Today there are very important articles. Again, I am that's basically my grievance against Hindu. Not so much, nothing as far as I'm concerned. Nothing that much important in Hindu. But if you ask me, there was one very important, let's say, there was one set of articles in Financial Express as well as Mint. Have you heard of the newspaper Mint? There is a newspaper Mint. There was one article in Mint regarding electric vehicles. Electric vehicles. And I believe there was one more article in Financial Express. Financial Express regarding, again, electric vehicles. Two very nice articles. If you ask me, should we read, right, regarding electric vehicles? If you have read these two articles, you could answer, let's say, most probably any question asked by UPSC. Right? In case of Financial Express, if I'm correct, the question was, can we say that the electric vehicles will be replacing diesel vehicles? I hope you understand. Can we say that in case of India, we can replace electric vehicles with the diesel vehicles? Do we have the infrastructure? Think of it. Please don't simply say yes. Right? Very difficult in India. Right? For example, if I ask you, will you purchase electric vehicle today? Or why have you not purchased electric vehicle? Right? Most of you will not have any answer. Most of you will not even know there is an electric vehicle available. Right? So that's the reason. Please read those articles. In Mint, there were two articles. The first page was basically the government of India reducing subsidy under FAME 2 scheme. And second article, I believe in the fourth or fifth page, the same discussion, right? As a result of this, what will happen, etc. And in Financial Express, the article was regarding, do we have sufficient, editorial page, do we have sufficient capacity, right, to promote the idea of electric vehicles in India? Very nice, two very nice articles as far as I'm concerned. Okay, so read. If you read newspapers, you will get a lot of information. A lot of information. Okay, now let's start. Next concept is small finance bank. I'll be discussing two very important concepts here. One is the idea of a small finance bank, SFB, and second one is the idea of a payment bank, PB. Payment bank, that is PB. Now, the idea of a small finance bank as well as the payment bank, these are very new types of initiatives promoted by RBI. That is very recently, in the last one and a half decades, we have started promoting small finance bank as well as payment bank. Right? If you have a book which is printed in, let's say, 2000, you will never see any discussion regarding SFB as well as PB. And there's a reason why RBI is promoting both of them. There is a reason. RBI says, I want to promote financial inclusion. RBI says, I want to promote financial inclusion in India. Now, there is one more term, financial inclusion. Now, what do you mean by financial inclusion here? Let me start. Financial inclusion simply means providing services. What kind of services? Financial services. Providing financial services in a very cost effective way. In a cost effective way. I'll give you examples, have patience. In a cost effective way to people. Now, I'll give a very simple example. Think of this and tell me. Have you heard of Pradhan Mantri Jan Dhan Yojana? PMJDY. Pradhan Mantri Jan Dhan Yojana. Pradhan Mantri Jan Dhan Yojana. What is the feature of Pradhan Mantri Jan Dhan Yojana? You can open a bank account with zero balance. You can have zero balance in your bank account. That is one of the very important features of PMJDY. Second one is, all you need to have to open the PMJDY bank account is just Aadhaar. Is simply Aadhaar. That's it. Have Aadhaar. You can open a bank account, and even if you don't have money, you don't have to have any kind of money in the bank account. You can simply keep it at 0 rupees balance. That is basically the most important features of Pradhan Mantri Jan Dhan Yojana. Now, tell me, through this, are we not trying to achieve what is given in the definition? Please have a look at it. With these two features, are we not trying to achieve what we are saying in the definition? Providing financial services to the people in a cost-effective manner. Now, many of you ask me, how? How are we achieving what we are giving in the statement? My dear, if you go to a bank, right, earlier, if you had been to a bank, you wanted to open the bank account, the bank manager will ask you, where is proof A, document 1, document 2, document 3, document 4. How many of you opened your own bank account? Please tell me, was the experience very smooth or very rough? Were you able to open the bank account in one go? Right? In that situation, I'll tell you what you would have experienced. You will simply go to the manager and say, sir, I want to open the bank account. Manager says, okay, I will assist you. Just give me these documents. Now you will take the photo, or first you will go with the documents. The manager looks at you and says, bring the photocopies of these documents. Now you will bring the photocopies. Then the manager will put both the documents side by side and say, your name is slightly different here in one document and it is different here. At least some of you would have experienced this. Right? For example, I'll simply say, in sometimes what will happen is, right, for example, I'll take my own name. In one document, it would be like Sham Kagod. Okay? And those who don't know, this is my name, by the way. In one document, it will simply say Sham Kagod. And in another document, it will simply say Sham K. Now the manager says, both the documents are using two different names. I cannot accept it. I cannot accept it. So bring me one document where the name is similar. Then you will search, right? Take a set of documents. Then the manager says, okay, this document that you have got, it is not acceptable to us. Take it back. Then you will take some more documents. Then the bank manager says, where is your recent photo? You will bring all of these. Then there is one more very, very nice term used by the bank, where is introducer's signature. Where is introducer's signature? That is, the bank says you will have to get one signature along with, right, the bank account number of our customer, who says, right, he knows you or she knows you. Those who have opened your own bank account, this is exactly the process followed by the bank. And some of you say, no sir, I did not experience it. It could be because somebody in your relation is a bank manager, or you are an employee in a company. Because the company has a tie-up with the bank itself will come to you and say, these are this, right? These are, right, the application form. Simply sign here, 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 and stand there. I'll take a photo and we will open the bank account. Right? Either would have experienced first or second. If you have experienced a second, great, congrats, it was very easy for you. And those who have opened your own bank account, you would have experienced the first one. Now imagine this is your experience. After you open the bank account, the manager says, sir, at all the point of time, you will have to keep 1,000 rupee in your bank account. Yes or no? Because we are issuing a checkbook to you, because we are giving a debit card to you, at all the points of time, you will have to keep 1,000 rupee in your bank account. Now, please tell me, will all the people, especially people residing in villages, will they be able to do the first process? Think of it. Will they be able to follow the first process? Very difficult. Second, let's say somehow they are able to open the bank account. Now they will have to keep minimum 1,000 rupee amount in the bank account. Is it possible for them? I have to understand. Is it possible? Those who are working as Manrega labor, those who are working, right, as agriculture labor, 1,000 rupees is a very big amount for them. Right? As a result of this, don't you think banking services are out of reach for such people? Right? The bank accounts are out of reach for these people. So what government of India has done? You don't need to do so much of circus. You don't need to have right, that document, this document, etc. You have Aadhaar, go to the bank, open the bank account. Then you will simply say, okay, I'll open the bank account, but there is one more condition that I'm afraid of. Minimum balance account. Minimum balance is 1,000 rupee. I cannot keep so much. Government says you don't have to keep, if you don't have money, don't keep anything in the bank account. Even if it is 0 rupees, nothing will happen. Don't worry. You can have zero balance in your bank account. That is basically Pradhan Mantri Jan Dhan Yojana bank accounts. Now look at the definition, right? Let me know if you disagree even now. It is providing financial services in a cost-effective way to the people, right? That is the term financial inclusion. Now I'll start writing examples. Please do let me know, right, whether you will agree or not. Pradhan Mantri Jan Dhan Yojana. Is it financial inclusion? Yes. Second one, how many of you heard of this? Pradhan Mantri Suraksha Bima Yojana, PMSBY. Pradhan Mantri Suraksha Bima Yojana. That is also financial inclusion. Third one, Pradhan Mantri Jeevana Jyoti Bima Yojana. Pradhan Mantri Jeevana Jyoti Bima Yojana. Right? Even this is a financial inclusion, right? A type of a financial inclusion service only. Done. So this is a basic idea for financial inclusion. Now, in addition to these three that I've told you, just examples. PMJDY, PMSBY, PM, right, the Jeevan Jyoti Yojana. In addition to these three examples, I'll give you one more example. Concept of Bank Sathi. Concept of Bank Sathi or banking correspondent. Some of the books will also use the term business correspondent. Bank Sathi or banking correspondent. The idea of a bank sathi or a banking correspondent was introduced by RBI post 2006 in India. Now, what is the advantage of a bank sathi? Let me explain this. Imagine this is a city, right? A taluk or a district, don't worry, this is a city. Around the city, there are small villages, very, very small villages. Now, the banks will not open branches in all the villages. It is not possible. It will not work out for them. And the reason, I'm pretty sure all of you will understand this. The cost of operations by opening the branch will be very, very high compared to revenue for them. So what these banks will do is, they will open a branch, let's say in the city here. Now, don't you think if the people who have the bank account, if they have to go all the way to the city to withdraw money, to deposit money, that will consume lot of time for the bank customers. Plus, they will have to incur money, spend money to reach the bank branch. Any difficulty to understand this? Right? So basically what would happen is, they might have a bank account, but accessibility will be problem. Accessibility will be a problem. In order to address this issue of accessibility, what this bank will do is, imagine this is a village. Within the village, they will appoint one person. There is a representative of the bank who is referred to as a banking correspondent or a bank sathi. Banking correspondent or bank sathi. Now, what this bank sathi will do? The bank sathi will allow you, if you are the bank customer, the bank sathi will allow you to conduct basic banking transactions. Basic banking transactions. And of course, the bank sathi will collect certain charges from you, because they are providing services. They will impose and collect certain charges. Now, what is this idea for basic banking services? You want to deposit money. You want to withdraw money. You want to apply, right, for opening a new bank account. You want to apply for agriculture loans, etc., etc. These are basic banking transactions, and these basic banking transactions will be allowed, right, by the bank sathis. They will provide these facilities to you, services to you. Of course, will collect certain charges from you. That is basically the concept of banking correspondence. Now, please tell me, can I say banking correspondent is an initiative under financial inclusion? Let me know. Banking correspondent or a bank sathi is an initiative of RBI under financial inclusion. Any problem here? Any problem? And right, some of you are asking, how will they allow us to withdraw? Right, very simple. They will have a small handheld machine. I'm pretty sure you must have seen this. Right, they will have a very, very small handheld machine. Right, they will ask you to provide your details. They will key in all the details. They will ask you to put the pin. They will allow you to withdraw money, deposit money, right, etc., etc. And that is basically how the banking correspondents or bank sathis will be working. Right, so this is right, one more initiative of Reserve Bank of India to promote financial inclusion in India. So come back. Small finance bank as well as the payment bank, both have been promoted by RBI, Reserve Bank of India, RBI, to promote financial inclusion. How? Please have a look at one of the very important points regarding small finance bank. The small finance banks, I'll come back to this, the small finance banks will have to have a PSL. They will have to have a PSL of 75%. I'll repeat the statement. The small finance banks will have to have a PSL of 75%. Now, you please tell me, a small finance bank having a PSL of 75%, will it not increase loan access to the certain sectors in the market or not? Agriculture sector, MSME sector, right? Export credit, education loans, weaker sections of the society, etc., etc. Will it increase the access? Of course, yes. Can we say, right, that is basically promotion of financial inclusion? So have a look at this. Small finance banks will be promoting financial inclusion by collecting deposits from the customers and by providing loans under PSL. Lot of these, the categories of the sectors under the PSL, they will get more and more access to loans from the small finance banks. The minimum equity paid up capital is 200 crore. Now, let me explain. Don't start typing. Let me explain this. Do you remember the concept of paid up capital that we discussed yesterday? Let me know. Right, and I'll tell you the context also where we have discussed. The idea of a paid up capital we discussed in the context of cooperative bank. Idea of cooperative bank. I told you, in fact, I took the example of a company also. A company will issue shares and collect money from the market. And that, right, the company, how much money they will collect by issuing shares is called as paid up capital. And please remember this, anybody who has a share is nothing but owner. Is it okay? Anybody who has a shares of the company is nothing but owner of the company. For example, I'll take a very simple example. Imagine there's a company XYZ, and in the company XYZ, out of total 1,000 shares issued by the company XYZ, imagine you have purchased 100 shares. Can I simply say you are 10% stakeholder in the company? Let me know. You are 10% owner or the stakeholder of the company. Any problem here? So how 10%? 100 divided by 1,000 into percentage, that is 100. Okay, so you're 10% owner. So understand this, small finance banks, the minimum amount of investment that should come from the promoters or the owners of the company is 200 crore rupees. Can I go to the next point? Can I go to the next point? The minimum amount of ownership investment that should be done is basically 200 crore rupees. Equity paid up capital. Equity paid up capital. Okay. Sir, in the book it is given as 100 crore rupees. Please update it. It is 200 crore rupees. When we launch the model, I understand some of you are saying, I'm pretty sure you are sitting with the book in front of the laptop. The book might simply say 100 crore. When we launched the model, it was 100 crore. Now it has been doubled to 200 crore rupees. Now, when you say 200 crore rupee investment has to be done, can we bring foreign money and invest in this? Can we have foreign investment in this? Answer is again yes. Please look at the next point. Please look at the next point. Right? Even foreign investment, maximum up to 74% of it will be allowed. That is the small finance bank features. Now let me go to certain important points. What are the functions of SFB? Point number one, it will accept deposits from the customers. Instead of accept a deposit, can I also write mobilize a deposit? Technical term, let me know. Instead of accepting deposits, can I also say it will mobilize a deposit? Both are one and the same, by the way. Both are one and the same. Okay. It will also provide loans to some of the sections in the economy where generally the borrowers in that section will find it very difficult to borrow from other sources. For example, farmers. Best example is farmers. Right? Don't you think farmers want to take loans? But the problem, I'll tell you, there are problems. Farmers will not be able to take all the loans that they want because there are constraints. For example, let me give a very, very simple idea here. Farmers, they will go to a bank and they want to take a loan. The bank says, okay, I will provide a loan, but please give me collateral. Please provide collateral. Collateral means security for the loan. Now you tell me, how many of you think that all the farmers in India will have sufficient collateral or security to provide? Think of it. It's a very simple idea, by the way. Right? Most of the farmers in case of India are not even having sufficient amount of revenue to feed the family. In this case, you are asking for a farmer to provide collateral, loan, right? Security for the loan. They will not be able to provide. And because of this, what will happen is farmers will not be able to get access to institutional credit. And that is the precise reason in case of India, a large number of these kind of people will go borrow from money lenders. And that is very dangerous. Is it okay? They will go and borrow from money lenders. Very, very dangerous. Okay. Right. So lend to unserved and underserved sections of the society or in the economy. For example, MSMEs, right? Or for that matter, agriculture sector, farmers, etc. Next, prudential requirements. Prudential means what are the macroeconomic requirements? Financial requirements. First one, these banks will have to maintain CRR and also maintain SLR. SFBs will have to maintain SLR as well as CRR. Second, the PSL criteria for the bank will be 75%. And the third point is at least 50% of the loan portfolio means collection. At least half of the loans given by these banks should constitute loans and advances up to 25 lakh rupees. Let me explain what is the importance of this. Imagine here is a bank. Understand this? Don't remember calculations. UPSC will not ask you calculations. Here is a bank. The bank is supposed to provide loans, right, under PSL. I'll just throw arbitrary number. Let's say 50 crore rupees. Again, arbitrary number, hypothetical number. Don't worry. Under, right, the concept of PSL, they are supposed to provide 50 crore rupees. Now think of it and tell me which of the two examples would you prefer? Example 1 and example 2. That is, 5 farmers will get 10 crore rupee each loan. Again, hypothetical. I know 10 crore rupee loan for 5 farmers will not be given. Example 2, there are 100 farmers. 100 farmers, each of them getting 50 lakh rupees each. Tell me, which of the two examples would you prefer? Example 1 or example 2? Example 2 would be more preferable. Some of us saying example 1. Why? Why? You want to provide a large value loan to very few farmers. Think of it. Right, again and again, just apply certain, right, the knowledge what you have discussed. You want to give large value loan to very few farmers, or you want to cover large farmers in the sense number of farmers. Don't you think second one will make sense looking at the economic context in India? Don't you think the second one will make more sense looking at what is the situation of agriculture in India? That is exactly what they are saying. Half of the loans that the SFB will provide should be up to 25 lakh rupees, which means, right, you cannot give large value loans. You will have to provide smaller value loans to large number of borrowers. That is the financial requirement for a small finance bank. Done? Right. So these are the points that I wanted to discuss regarding SFB. Let me go to one more type of a banking institute that is being promoted by RBI, payment banks. Payment banks. Now, very interesting model. The idea of a payment bank is that this will be one more type of a bank to promote financial inclusion. Right? What is this idea of a payment bank? Understand this. Payment bank will be a financial institution that RBI has allowed to be set up in India, where the banks are allowed to collect deposits. The banks are allowed to collect deposits, but they are not allowed to lend. I'll repeat the statement. These are the types of financial institutions, that is a bank, which are allowed to collect deposits, but they are not allowed to lend in the market. Right? They are not allowed to provide loans in the market. That is basically the model of payment banks in India. Now, many of you will start asking me, as expected, many of you will keep on asking me, sir, why? Why do we require different types of banks such as payment banks, RRBs, right? We also have a small finance bank. We also have other banks. Why? Let me ask you a very simple question. Imagine your RBI governor. I will come to you, ask for a banking license. And when you say banking license, generally there are two types here. Understand this carefully. One is called as a universal bank, and second one is called as a niche bank. One is called as a universal bank and second one is a niche bank. What do you mean by universal bank? Universal bank will provide large number of banking services. Large number of banking services. Best example, SBI. Tell me, right? Don't you think State Bank of India will provide large type of banking services? For example, you can open multiple types of deposits with SBI. You can take multiple types of loans from the SBI. SBI will provide insurance services to you. SBI will provide locker services to you, etc., etc., etc. Right? Agreed? Come to the other side, niche banking services or niche banks. When you talk about niche banks, they are also banks, but they will not provide all these banking services. They will provide very limited banking services. Very limited banking services. Now, let me ask you a very simple question. Very, very simple question. Think like an RBI governor. You are the RBI governor. I will approach you. I want to take a banking license from you. And by the way, RBI is the regulator. Now, you tell me, will you directly provide universal banking license or you will ask me to work as a niche bank first? Think, then you will understand why. Why these different types of banks are there in India. Will you directly provide a universal banking license? If you do that, don't you think as a regulator, you are also making the customers' deposits more risky? I hope you understand, right? That is the reason what you will do is, you will ask me as a niche bank first, maybe a payment bank. Then you will simply say, work as a niche bank, prove me that you can conduct banking services. You can manage a bank. Prove me that. After 5 years, I might think of promoting you as a, let's say, from the payment bank to a small finance bank. I hope you understand. Right? Prove me that you can conduct the banking operations correctly. Then I might simply think of converting you, giving you the license to become a small finance bank. And then the small finance bank, right, work for 5 years. Then I look at your performance. Then I might consider you to convert into universal bank. Does this make sense to you or not? Let me know. Will this make sense to you or not? That is, by the time you become a universal bank, you know how to operate a bank. You know what has to be done, in what situation, what kind of loans has to be provided. You know there could be risk in the market, right? You have experienced all of it. You have experience of more than 10 years in the bank now. Then you become a universal bank. Right? That is the reason why RBI will keep on creating these types of smaller niche types of banks, finally migrate you into universal bank. Right? That is a basic concept. Right? So that's the reason it should make sense to you. Right? Because many of you are asking, sir, already the universal banks are there. Why need of SFB? Tell me, is the functioning of SFB and SBI both are one and the same? Think of it. Please look at the prudential norms. Do you think SFB and SBI both are working similar? Same? No. Right? SFB is more towards giving loans to certain sectors. SBI, any sector that they want. Of course, they will have to follow PSL. PSL norm for SBI is 40%. So that's a reason. That's a reason this kind of migration has to happen. Get experience, then you will be allowed to function as a universal bank. Okay, come to the idea of a payment bank here. Now, what is this concept of a payment bank? Payment banks are allowed to collect deposits, but they're not allowed to give loans. And when I say they are not allowed to give loans, will they be allowed to issue credit cards? Think of it. When they're not allowed to give loans, will they be allowed to issue credit cards? Of course, no. Credit card is also a loan only. If you understand, credit card is also a loan. That is, it's already approved, right? The loan amount is, or let's say the credit limit is decided. You'll keep on swiping left, right, center, wherever you go throughout the city, right? So deposits collection is allowed. Loans are not allowed. And when I say deposit collection is allowed, there is a constraint there also. There's a condition there also. That is, they are allowed to collect only up to 2 lakh rupee per customer. Per customer, they are allowed to collect up to 2 lakh rupees. Nothing more than that. Books will give you 1 lakh rupees. To begin with, it was 1 lakh. It has been shifted, doubled to 2 lakh rupees now. It is a 2 lakh rupees as per the current norms. Please remember that. Paid up capital should be how much? Minimum 100 crore. Can you bring foreign investment into this? Yes. Again, same, up to 74 rupees. I'm sorry, 74%. You will have to maintain capital adequacy ratio of 15% of RWA. Remember this, 15% of RWA, capital adequacy ratio, CAR or CRAR. Yesterday we have discussed this. CAR or CRAR must be 15%. In addition to this, out of 15%, at least half of this, that is very important, at least half of this has to be the tier 1 capital. At least half of this must be tier 1 capital. Right? So these are capital requirements. Now, what are the functions? It cannot provide loans. Right? The payment banks are not allowed to provide loans. Point number 2, they will be allowed to collect a deposit, but 75% of this, please remember this, 75% of the deposits that they have collected, they will have to invest in government securities. They will have to invest in government securities, and remaining 25% they will have to keep with other banks in the form of deposits, and they will have to maintain CRR. And many of you will start typing now, sir, what about SLR? Now, my dear, please tell me. And many of you will start typing, I know that, because it is written CRR is supposed to be maintained. Immediately you will ask me, what about SLR? Please look at the next point. 75% of the deposits, if you keep in the government securities, can I call this as SLR? Think of it, right? SLR is also maintained, CRR is also maintained. Now, how do they make profit? And that is where I asked you, have you read the article that I gave you yesterday? This is where I was asking you, have you read that article that I gave you yesterday, which had appeared in yesterday's newspaper? It is very difficult for the payment banks to generate profits. Very, very difficult. In fact, please read that article at least today. What is given in the article is, RBI gave around 11 licenses. Around 11 licenses were issued by RBI for opening payment banks. And some of these licensees, that is the companies which had purchased a license, looked at the model of payment banks and they realized that they will not be able to generate sufficient amount of money. Because the reason is very simple. Banks generate revenues by lending. Is the logic okay? Banks, most of the revenue that the banks will generate, they will generate it by giving loans. But in this case, the payment banks are not allowed to give loans only. They are allowed to generate revenues. For example, you will ask me, sir, how will they generate revenues? My dear, they will collect the deposits, 75% of it, they will keep it in government securities. Will they earn money or not? Think of it. Will they earn money on this or not? Yes. Remaining amount, they'll keep it with another bank. On that deposit, will they earn money? Yes. They will provide remittance services. Remittance services means transferring funds. Transferring funds from one region to another region. They will provide remittance services. On remittance services, they will impose certain charges and collect it. So there are different sources from which they will be able to generate revenues. But the problem is very simple. Because they are not allowed to provide loans, a major chunk of revenue source is loans only. Profitability is very, very difficult. And that is the precise reason, right? That is the precise reason these payment banks find it very difficult to generate revenue. Some of them, even today, they have not been able to generate revenue. And if you have read the yesterday's newspaper article, only 3 payment banks have started making profits now. Only 3 payment banks have started making profits. right? That is the reason payment bank model, right? Very, very difficult to operate in India. Done? Any difficulty? Any example of a payment bank? Have you heard of Paytm? Paytm, India Post, right? There are many, many payment banks, right? There are many, many payment banks, right? So which are operating in India, right? So this is a discussion regarding one more type of a bank in India, that is a payment bank. Okay, so let me give you certain uh, recommendations of committees. Any difficulties so far? Can I go to the next one? Any difficulties? Which article sir is telling? My dear, yesterday's PPT. Yesterday's PPT. Please download it. Right, in the first or second slide, I've given the same article. Right, that is a payment banks. Sir, ALM is based on which concept? It is not based on which concept. It is basically the idea of a, right, the mismatch of difference in the tenure of assets and as well as liabilities. SFB equity. I'll repeat it again. The idea of a SFB equity is that owners are there. All of you understand the term owners. That is who is going to start this company. So the minimum amount, right? Minimum amount of investment that has to be done by the owners, capital that has to be invested, that is called as paid up capital. Okay. PayPal is also payment bank. No, as far as I'm concerned, PayPal is a service provider. It is a service provider, not a payment bank. Paytm gives loan. Paytm will give loan, but Paytm payment bank will give loan to you. Tell me. Paytm, many of you are writing, sir, Paytm is giving loan, that is giving loan, etc., etc. You tell me, will Paytm payment bank give you loan? Check it very carefully first. Okay, done. So we are basically at the fag end of this chapter. Very big chapter, I know that. But if you have seen the question paper, you will realize that this is a very, very important chapter. Let's start. So Narsimham Committee, two sets of committees, 1991, 1998. Two sets of committees, two committees, Narsimham committees. I'm using the term Narsimham committee. UPSC, if they want to confuse you, they will also use one more term, Committee on Financial Services. Committee on Financial Services. CFS. Committee on Financial Services. Two, that is 1991 and 1998. Done. So CFS 1, CFS 2 or Narsimham 1, Narsimham 2. Let's start. So first one is no further branch licensing. What do you mean by branch licensing? Imagine you have a bank, you want to open 100 branches in India. Right? If you want to open 100 branches, you will have to take permission from RBI. You will have to take the license from RBI. Why? I'll tell you. RBI knows that. I'll ask you a very simple question. You want to open 100 branches. You tell me honestly, how many of you will decide to open these branches in villages? Let me know. How many of you will simply decide, right, let's go to the villages, open branches in the villages? No, you will not do that. Simply don't say, sir, I will do. Everybody is focused on profit. Everybody is focused on profit. And you also know that if you go to the village, open the branch, the cost of operating the branch will be much, much higher compared to your revenue. So what you will do is, if there is no requirement to take approval of RBI, every one of you will decide to open the branches in bigger cities. Now, right? So now what RBI says is, in that case, we'll do a concept of licensing. That is, you want to open the branches, I will tell you how many of these branches you'll have to open in villages, that is a rural part of India, how many in urban part of India. So further branch licensing requirements is there even today. Narsimham committee says we should not have it. We should not have the licensing policy for branches. And the argument of Narsimham committee is very simple. Branches should be your decision. Is it okay? Where you want to open the branches should be your decision. It should not be decided by RBI. Right? That is the first recommendation. Second one, no further nationalization. That's a reason. How many rounds of nationalization has happened so far? 2 rounds of nationalization, 1969 and 70 and 1980. After that, was there any nationalization? Absolutely no. Absolutely no. After 1980, we have not gone for nationalization. Narasimham Committee says, don't go for nationalization. We have sufficient number of public sector banks. Rather than nationalization, have a look at this. I'll come back to this slide. Allow private sector entry into the banking sector. Allow private sector entry. Allow foreign banks to come into India. Why are you nationalizing every bank? Right? So don't nationalize, allow private sector participation so that competition will be promoted. The priority sector lending should be brought down to 10%. PSL should be brought down to 10%. Has it been done in India? No. Even today, it is 40%. Even today, it is 40%. And what is the reason behind this? Why the committee says it should be brought down to 40%, 10%? Now, you tell me you're a bank. Simple question. You're a bank. Don't you think, based on your calculation, you would prefer to give a loan, let's say, to an industry that is a businessman compared to providing loans to a farmer? Think of it. And that is rational, by the way. Nobody is going to criticize you. That's a rational. Why? By providing loan to the farmers, you know you are taking a very huge amount of risk. Very, very high amount of risk. So this committee said, why are we not allowing the bank to decide where they want to open the branches? Why are we not allowing the bank to decide to whom they want to provide loans for? Right? That's the reason the PSL recommendation was to be brought down to 10%. We have not done it. We will have to reduce SLR as well as CRR. We'll have to reduce SLR as well as CRR. We have done this. Why? Before 1991, if you took SLR and CRR, it was sometimes more than 50%, sometimes more than 60% also. But today you look at what is CRR, what is SLR, it is somewhere in the range of 20%. Again, I'm not giving you exact number, right? It is in the range of 20%. So we have reduced, right, the SLR as well as CRR, which means the potential to provide more credit, right? Giving more of a credit, issuing more credit is higher now. Computerization of the banking sector. Did we implement today? I'm sorry, did we implement this? Computerization in the banking sector, right? Have you seen the computers in the banks or not? Right? And some of you might be thinking, what is the advantage of this? What is the use of this? My dear, earlier, right, before the computers were introduced, you must have seen in the movies, there will be very, very big books which are maintained by the banks, khata books. These were very, very large books, account books. They used to open it, keep on searching page wise, because page wise account numbers used to be allocated. They will have to search, go to that account, make an entry on the debit side, credit side, they will have to balance, etc., etc. Such a headache. From that system, now it is all computers. It is very easy to maintain all the documents. The system will become very fast, smooth, much more efficient, etc. Right? Computerization of the banking sector also has helped in providing better services to customers. Debt recovery tribunals should also be set up. Did we discuss DRTs? Let me know. Did we discuss the DRTs earlier? Debt recovery tribunals. Recommendation of Narasimham Committee. Recommendation of Narasimham Committee. We should set up ARCs. Yesterday we have discussed this. We should also promote establishing asset reconstruction companies. Right? Recommendation of Narasimham 1 Committee. Banks should be allowed to raise the capital by issuing shares in the market. The banks should be allowed to go to the market, that is, go to investors, issue shares to the investors and collect capital. Are we doing this today? Think of it. Are we doing this today? Are you allowed to purchase shares of SBI? Are you allowed to purchase the shares of Punjab National Bank? Or Baba, some of you saying no. My dear, shares of SBI is there in the market. You can purchase it, by the way. Shares of Punjab National Bank is available. Shares of Bank of Baroda is available. Which means we have allowed the banks to go to the market, issue the shares and raise the capital. That is also implemented. Now, it also recommended a 4 classification or a 4 tier structure, 4 slab structure or 4 tier structure. We should have 3 to 4 large banks at the top, 8 to 10 nationalized banks. Below that, there should be local banks, and below that, there should be rural banks. This is the recommendation of 4 tier structure that has been recommended by Narasimham 1. Okay, right? So these are some of the recommendations of Narasimham 1 committee. Now, Narasimham 2 committee. Narasimham 2 committee, 1998. First recommendation which has been implemented, set up Credit Information Bureau. Set up Credit Information Bureau. Now, what is the side of a Credit Information Bureau? Tell me, have you heard of CIBIL score? Let me see. Have you heard of something called as CIBIL score? That is basically Credit Information Bureau of India Limited. Of India Limited, CIBIL score. Idea of a CIBIL score is very simple. Imagine here is a customer. The customer will go to the bank and wants to take a loan. Right? Imagine you are the bank manager. I am a customer. I will come to you. I will ask you, sir, can you or madam, can you please give me a loan? Now you tell me, will you simply provide loan to me? Think of it. Will you simply provide loan to me? Without checking anything, will you simply provide loan? Of course, no. Right? Out of all the things that you do, one of them will be the bank will check what is the CIBIL score of the customer. What is a CIBIL score of the customer? In short, what is the credit score of the customer? And what is the importance of the CIBIL score? If the CIBIL score is higher, 700, 780, 820, 890, if the CIBIL score is higher, it simply means in the past you have taken the loans and you have repaid the loan. Simple. CIBIL score will give you idea about how credit worthy the customer is. Right? Has the customer in the past taken any loans? If yes, has the customer repaid the loans promptly or not? If they have paid the loans promptly, generally the CIBIL score will be higher. If they have not repaid the loans, if they have defaulted, etc., CIBIL score will be lower. Any problem with this? This is basically the concept of CIBIL score. And higher the CIBIL score, right, very easy for you to get loans. Higher the CIBIL score, very easy for you to get loans in the market. For example, if you have a CIBIL score of 800, 820, 840, 860, 890, banks will not find any difficulty in providing loans to you, provided you have a collateral. You have a security to provide to the bank. Right? That is basically the idea of a CIBIL score. And very important, by the way. Very, very important. Okay. Right. So setting up of the Credit Information Bureau. Credit Information Bureau, the recommendation came from Narasimham Committee. Merger of a strong banks to make mega bank. What is this idea of a mega bank? I'll give a very simple hypothetical situation. Please do let me know. If I merge State Bank of India and Punjab National Bank, will it be a very, very large bank or not? Simple idea, by the way. If you merge State Bank of India and a Punjab National Bank, both are very strong banks, by the way. Both are fundamentally very, very strong. If you look at their NPAs, asset sizes, the credit offtake, right, the deposit sizes, these are very, very large banks. Now you merge these two large bank, will it be a mega bank? Of course, yes. It will be a much bigger bank. And why? What was the recommendation here? If you create a very, very large bank like this, mega bank, it will become very, very competitive. It can provide large value loans. Efficiency of the bank will start increasing. Right? That is basically the concept of a mega bank recommendation by Narasimham Committee. The weak banks should be referred to as narrow banks. I'll explain this. The weak banks should be asked to follow narrow banking. Now, what do you mean by narrow banking? Let me explain this. Follow this very carefully. And by the way, I'll ask you a question after this. Have a look at this. You are operating a bank, or let's say there is a bank. The bank will provide loans to agriculture sector. The bank will provide loans to industries. And the bank is also investing in government securities. Done. The bank is also investing in government securities. Now, if the bank is continuously having very high NPAs are continuously increasing, the losses incurred by the bank is also continuously increasing. Simple question to you, your RBI governor, will you allow this bank to continue to provide agriculture loans, industrial loans, and investment in G securities? Think of it. Will you allow the bank to continuously give loans to agriculture sector? If you say yes, you are wrong. Why? Agriculture sector loans are very risky. Already the NPAs of the bank is very high. Losses are also very high. What about the industries? That is also risky. Look at the NPAs. Look at the NPAs. NPAs are very high. Losses are very high. Right? Will you allow the bank to further take more risk? No. What about the third one? What about the third one? You tell me. If the bank is asked to keep all the deposits that they have in government securities, are they facing a risk there? Right? Have you seen any example where Government of India has not paid money on their government securities? You will not find the example. Don't waste your time. Can I now say RBI will simply ask bank not to provide further loans in agriculture sector and industries, and RBI will simply ask the bank to keep deposits in government securities? Can I call this as narrow banking? Can I refer to this process as narrow banking? Narrow means what? Wide and narrow. Have you heard of this? Basic English. Wide and narrow. Narrow basically means, or narrow banking basically means, the activities of the banks are limited. Where they're allowed to make investments, it will be very much limited, because RBI knows this bank might incur a loss if they are allowed to provide loans again. That's the reason RBI will simply ask the bank to take the deposit, invest in the G securities. And many of you are asking, sir, investments in G securities, will they carry risk? My dear, risky. I am not saying there is 0% risk. But please tell me, is there any example where Government of India has defaulted on the repayment? I hope you understand. This is at least the 10th time I'm telling you this. Tell me any example that you have come across, because you people generally try to find exceptions here and there. Any example where Government of India said, I'm sorry, I will not be able to repay the money? Let me know. It has not happened. Even in 1991, when the economy was experiencing so many difficulties, we borrowed and made repayment. I hope you understand this. We have borrowed and made repayments, but we have never defaulted on the payment like this. That's the reason, right? This concept is referred as a narrow banking, right? So the recommendation of Narasimham committee was the weaker banks where NPAs are increasing, losses are increasing, ask them to follow narrow banking. More powers should be given to the bank boards. More power should be given to the bank boards. Why? I'll tell you. In case of India, how many of you heard of this Department of Financial Services? Again, when I keep on asking you how many of you heard of this, if you read newspapers, you will come across this. Department of Financial Services. It is one of the departments under Ministry of Finance. It is one of the departments under Ministry of Finance. In short, this is called as DFS, Department of Financial Services. Now, in regards to public sector banks, PSBs, point number one, who is the majority owner? Who is the majority owner of PSBs? Government of India. All of you will agree? Government of India. And when the Government of India is the majority owner, don't you think majority of the functions or lot of the functions which are conducted by the PSBs will be directed by DFS. Let me know. Right? PSBs majority owner is Government of India. And right, which department will look after the PSBs? It is the Department of Financial Services. Now let me ask you a very simple question. If you are a bank, power is given to you. Will you provide right these kind of services to agriculture sector? Think of it. Will you provide these kind of services to the MSME sector? Of course, majority of you will simply say no, sir, because I'm focused on my profitability. I'm worried about my profitability. Why should I be worried about what happens to MSME, what happens to agriculture? I'm worried about my profitability. So the interference of the government activity is very, very high. Interference of the government in the functioning of PSBs is very high, right? So you should provide more and more power to the bank itself rather than government, right, trying to interfere in the activities of the bank. And finally, the owner and regulator should be different. Owner and regulator should be different. They should not be one and the same. Let me explain the meaning here. Here is a public sector bank. Public sector bank. Who is the owner of public sector bank? Government of India. Any problem? Owner. Owner of public sector bank? Government of India. Who is the regulator of public sector bank? Reserve Bank of India. But who is the owner of RBI? Look at this. Right? Public sector bank, majority owner is Government of India. PSB regulator is RBI. Who is the owner of RBI? Government of India. Now, don't you think there is a conflict of interest here? Please have a look at this. Right? Don't you think there's a conflict of interest? What is a conflict of interest? Government is the owner. Government, right, through RBI is also a regulator. Right? There is a conflict of interest because as an owner, you want to earn more profit. As a regulator, profit is not priority for you. Stability is a priority for you. Any problem in understanding this? Please do let me know. Right? As an owner, you want to earn more profit. As a regulator, you want to ensure the whole financial system is stable. No banks will incur losses. Banks will not misuse funds, etc., etc. That is the precise reason. What has been recommended by many committees is that Government of India directly has the ownership of PSBs. Rather than this, a new authority must be set up. A new authority must be set up. The ownership of PSBs, the shares of the PSBs must be transferred by the Government of India into the hands of the authority. Is the logic okay with all of you? Government of India directly owns the shares. 51% ownership is directly with Government of India. So what we can do is set up a new authority, transfer the ownership that is there with the Government of India to this authority, so that Government of India directly will not have the ownership and through RBI will not become the regulator. That is basically the recommendation. Did we implement this? No, we have not implemented this even today. That is basically the recommendation of Narasimham Committee 2nd, 1998. Okay. Right, so this is the discussion, right, regarding the Narasimham Committee 1, Narasimham Committee 2. Shall we go to the next one? Which authority? Don't worry, we have not established it. Why do you want it? Why do you want it? Not required. That was a recommendation. Okay. Is private sector entry implemented? Of course, yes. Can you see a lot of private sector banks, especially foreign banks in India? Let me know. Can you see foreign private sector banks in India? Right? Yes, you can see. If you search, you will see that. Right? Many examples are there. Okay. Narasimha Committee, last point. What is that last point? We should have a 4-tier structure. Simply by heart it. We should have a 4-tier structure. That is, the banks should be divided into 4 parts. At the top, we should have the larger banks. Below that, we should have 8 to 10 nationalized banks. Below that, we should have local banks, and finally, rural banks. This was the recommendation. And they have given what will be the function of larger banks, what will be the function of national banks, local banks, and rural banks. Not required for you. Just simply remember, 4-level structure was recommended. Done. Any difficulty so far? Any difficulty? Can we go to the next one? Even through this, ultimate owner will be Government of India. Right? Again, please understand, yes, ultimate owner is Government of India. But when you set up an authority, transfer the ownership of the PSBs to that authority, you do not have a direct ownership in the PSB. Through the Department of Financial Services, you cannot control, right? You cannot control the functioning of PSBs. You cannot control the functioning. That was the whole idea. Okay. Last concept that I'll be discussing within the idea for banking is, right, again, not related to banking, idea of NBFCs. Idea of, right, NBFCs, or the concept of NBFCs. Non-banking financial companies. NBFC simply stands for non-banking financial companies. Now, please understand this. Many of you will ask me the definition of NBFC, non-banking financial companies. This is my advice to all of you. What I could have done is, and you can also check it when I give you a break. From RBI website, I would have taken simply the definition of NBFC, given it. But when you check the RBI website, which is not at all required, you will see the definition of NBFC is not 1 or 2 lines, it is 15 lines. It is a paragraph. It is not just 1 or 2 lines, it's a paragraph. So what I would recommend is, please don't by heart that. Please do not by heart it, not at all needed. What I will give you is a very simplified definition of an NBFC. NBFCs are financial institutions which are registered under the Companies Act. I'll repeat it again. NBFCs are the financial institutes, right? These are the financial institutes which are registered under the Companies Act. Now, what is the basic idea of an NBFC and a bank? Let me explain this. Follow this very carefully. On one side, I'll simply write the term bank here, and on the other side, I will write NBFCs. Right? Point number 1. Banks are registered under what? How many of you remember this? Banks are registered under what? Banks are registered under Banking Regulation Act. Any difficulty? Banking Regulation Act. NBFCs are registered where? NBFCs are registered under Companies Act. These are registered under Companies Act. The banks will collect both the types of statement. The banks will collect both the types of deposits. One, the demand deposit as well as time deposits. The demand deposit as well as time deposit. Whereas NBFCs, they will not collect demand deposits, they will collect time deposits. And again, please understand the next point as well. Within NBFCs, it is there in the slide. These are further divided into 2 types. One is called as a deposit collecting NBFC, and the second one is a non-deposit collecting NBFC. And I'll give you very simple examples, right? Thousands of NBFCs are there in India. More than 10,000 NBFCs are there. You don't have to remember. Have you heard of Muthoot Finance? Tell me, have you heard of Muthoot Finance? Right? Have you heard of Bajaj Alliance? Bajaj Finance, Aditya Birla Capital. All these are, my dear, NBFCs. All these are nothing but NBFCs itself. So NBFCs can be deposit taking NBFCs which will collect deposits from you, but these deposits cannot be demand deposits. They will have to be time deposits. And generally, in case of time deposits that are collected by NBFCs, the time period is 12 months to 60 months. 12 months to 60 months. These are the types of time deposits which these NBFCs are allowed to collect from the investors. Third, banks can be part of payment and settlement system. Banks can be part of payment and settlement system. Sir, what do you mean by payment and settlement system? Simple idea. Can we use a check to make payment? Let me know. Can we use a check which is issued by the bank to make a payment? Answer is yes. Can we use, right, let's say the technical terms now, NEFT? Have you heard of this? National Electronic Fund Transfer. NEFT is National Electronic Fund Transfer. Right? RTGS, real-time gross settlement. Right? All these are the types of payment systems. All these are nothing but payment systems. Check is a payment system. Right? NEFT, I'll repeat the long form here. National Electronic Fund Transfer. RTGS, real-time gross settlement, right? Even IMPS, right, etc. There are a lot of payment settlement systems. Banks are part of it. Banks are part of it. NBFCs are not a part of payment settlement system. Are not a part of payment settlement system. This is another very, very important difference. Fourth one, in case of the deposits that you keep with the bank, deposits are insured. Deposits are insured. Do you remember the authority? DICGC. What about NBFCs? Deposits are not insured. Deposits are not insured. Right? Basically, why? NBFC is not a bank. NBFC is not a bank, right? So these are not insured. Done. So these are the important differences between a bank and NBFC. Any difficulty? Any difficulty? Please do let me know. Shall we go to the next one? Now, this is the point I keep on telling you people. When I ask you any difficulty, this is the time you ask me questions. I'll start, right, explaining, and right, the student will start typing, right, you did not answer my question. When you've asked the question, I'm discussing. Tell me now. Fourth point. The deposits which are kept in the banks are insured. Insured means what? My dear, that right, this is the problem with the students. You don't, right, you don't practice, you don't revise. There's a concept called as a DICGC, Deposit Insurance Credit Guarantee Corporation, which we have discussed earlier. Under the Deposit Insurance Credit Guarantee Corporation, whenever you keep money with the bank up to 5 lakh rupees, the deposit insurance is provided. Done? Next, any other question? Point 3. The banks are a part of a payment settlement system. Let me prove it to you. All of you have a bank account, and because you have a bank account, you'll have a mobile app. Yes or no? You'll have a mobile app. You open the mobile app, there will be one option available to you: transfer payments. Transfer money, transfer, right, payment, whatever it is. And if you choose that, right, what are you doing? You are transferring funds from your account to another account. You are transferring the funds from one account to another account. But how? If you have transferred, you will know this. If you are making a transfer, there are options. They will ask you whether you want to make RTGS, whether you want to make IMPS, whether you want to make NEFT payment, etc. Options are there. Just observe it. Right? So payment and settlement system, banks are part of this. NBFCs are not a part of it. Okay? How they deposit without payment? What do you mean they deposit without a payment? You tell me. What are you looking at? I don't know what are you looking at. Okay, done. Simply, okay, let's continue. So this is basically the differences between the bank on one side and NBFCs on the other side. So come back to this. Non-banking financial companies are basically financial institutions which are registered under the Companies Act, and these will provide financial services. Without meeting the legal definition of a bank. These will provide financial services. For example, there are NBFCs which will provide a gold loan to you. I repeat, there are NBFCs which will provide gold loan to you. Bank will also provide gold loan to you. But tell me, NBFC, is it a bank? Is it meeting the legal definition of a bank? No. Right? That is the meaning of the statement given here. These are registered under the Companies Act of 1956. Now, some of the books, rather than writing 1956, they will also write 2013. Instead of writing 1956, they will also write it as 2013. Why? We had a Companies Act of 1956, but post 2000, Government of India realized that this Companies Act is very, very old. So what they have done is they have introduced one more Companies Act which will supersede the 1956. That's a Companies Act of 2013. Third, these have been kept under the regulatory control of RBI from 1997. These are coming under the regulatory control of RBI, which means the NBFCs will have to take a license from RBI. Right? Instead of license, I'll say registration. They will have to be registered. Right? They will have to take a certificate of registration from Reserve Bank of India, RBI. And these have been classified into deposit taking as well as non-deposit taking. And this is where, right, understand this carefully. The deposit taking NBFCs must be registered with RBI, and this will come under regulation of RBI. And some of the NBFCs are also regulated by other agencies. Let me give a very simple example. Have a look at this. Right, I'll give you an example. Have you heard of stock broking agencies? Stock brokers. Have you heard of this or not? Or else, sir, very, very, very technical. I've never heard of it. Have you heard of mutual funds? Don't say, sir, I've not even heard of the term mutual funds. Then, my dear, I don't know what you are reading in the newspaper also. Have you heard of mutual funds? Mutual funds is sahi hai. Insurance companies. Anybody who says, right, sir, what is an insurance company? I have not even heard the term insurance so far. Now, please understand this. Mutual funds is an example of an NBFC. Insurance companies are examples of NBFC. Now, simple question to all of you. Do you think it is appropriate for RBI to regulate insurance company? Let me know. Does it make sense to you if RBI will start regulating insurance company? Some of you say yes, even now. How? What is your argument? Insurance company, is it providing banking services? Think of it, no, at least. Right? No, it doesn't make any sense. Should RBI regulate mutual fund companies? Doesn't make any sense. That is the precise reason there are many other regulatory authorities just to ensure that there is no overlapping regulation, there is no conflict between the regulators. There are other regulatory agencies. For example, mutual funds. Mutual funds are basically investing in the stock market. These will come under the regulation of SEBI. Securities Exchange Board of India, SEBI. Right? Insurance companies, they will come under the regulation of Insurance Regulatory Development Authority of India, IRDAI, Insurance Regulatory and Development Authority of India. That is the last point. Please have a look at this. That is the last point. The deposit taking NBFCs must be registered. They should seek certificate of registration from RBI. But some of these NBFCs will come under regulation of other institutions, other regulatory authorities. And the reason is simple, so that there is no overlapping regulation. And RBI doesn't have the have all these right, let's say knowledge to regulate mutual fund companies, stock market agencies, or even for that matter pension companies, etc. That's the reason this bifurcation has been done. Any difficulty? Now can we take a break? Can we take a break now? Next, I want you to understand a new current affairs topic, scale based regulation. But before that, right, before that, any kind of questions, please do let me know. This is the time, ask the questions. Why it is very old? What are you asking? Companies Act. My dear, imagine you are the government of India, you are in 2000 and the Companies Act is 1956. Don't you think the situation in the economy in 2000 could be much, much different compared to Companies Act of 1956? Of course, yes. What is the purpose of NBFC? Let me discuss NBFC first. Have patience. Let me discuss NBFC. Sir, many governments across the world have defaulted in the past. What about that? Yes, many governments have defaulted. Yeah, there will be situations many governments have defaulted. You tell me, has government of India defaulted? And even if you say, let's assume, right, governments will default. You please tell me, between the government, you are an investor, between the government, or you are a lender, between the government and private sector, where do you think your investments are more secure? Where your credit is more secure? At least now, does it make sense to you? So governments will default. Of course, yes. And governments, many governments across the world have defaulted. But does it take away the fact that between the government and the private sector, or for that matter, anything else, it is much safer to invest with the government rather than anybody else? That is a point. Okay. Payment banks, in a way, narrow banks. No, these are called as niche banks. These are called as niche banks. Can you explain how payment banks are not able to generate sufficient deposits? My dear, there's a very, very strong competition. Payment banks are able to collect only up to 2 lakh rupees, right? And you have, let's say, a State Bank of India as well as payment bank. You tell me, SBI is there, ICICI is there, Canara Bank is there, Punjab National Bank is there. Why will you opt for a payment bank? Right? Automatically, you will opt for any of these public sector banks. What is provisions of saving vehicles? You tell me, where have you read it? What is the context? Simply don't pick up a statement from somewhere and throw it at me. You tell me. If you simply pick up from somewhere, I don't know what are you asking me. Okay. Government clearance. What do you mean by government clearance? That's the reason. Simply don't pick up a statement from somewhere and throw it at me. I will not know what you have read. Where have you read it? Right? Only then I will be able to understand it, because I have not used the term government clearance anywhere. Right? If you have come across in my PPT, tell me the context. Everywhere they are building bridges for their profit and GDP, but no one is looking at the displacement taking place because of, again, right, whenever you talk about infrastructure project, you're not discussing economics, you're discussing social issues then. And of course, yes, infrastructure projects, for example, when I discussed GDP, I told you, you always talk about production, but what about the loss to the environment? When you talk about infrastructure project, of course, yes, there are certain social aspects associated with that, right? That government has to address it. Okay. What did sponsor bank get investing in RRB? Ownership. If the sponsor bank will make an investment, 35% ownership is there with the sponsor bank only. That's the basic idea. Okay. Okay. NBFC time frame, it is 12 to 16 months or 60 months? 60. Can private companies issue bonds? Did we not answer this? Please tell me. The question is, can private companies issue bonds? Then it simply shows that then you will simply say that faculty does not answer my question. If you don't revise, everything is new for you. Right? Of course, yes, it is there in the PPT. We discussed that. We solved a question on that also. But anyways, payment banks cannot undertake lending activities. Why? It has to maintain capital adequacy ratio. Tell me, will a bank incur loss only because of credit risk, or it will incur losses because of the credit risk, market risk, and operational risk? Then automatically you'll understand what is the requirement of maintaining capital adequacy ratio even in case of the payment bank. Okay. Why should government have 51% of the shares? My dear, earlier 100% of ownership was there with government of India. Over a period, it has sold away, right? At least 51%, because 51. Can you understand the term majority? Tell me a very basic idea. Can you understand the term majority? Majority means what? More than 51%. So government of India, if they want to control public sector banks, that is, they want to have ownership in the public sector bank, they will have to have at least 51% ownership. That's the reason. Okay. What's the purpose for PBs? Again, same question. Did we not discuss why RBI is promoting PBs, SFBs, then universal banks? Please listen to the discussion carefully. Why the topics that you mention are not covered in CNA? My dear, Hindu. Please read the title at least of the video. It is Hindu. And the articles that I told you are not from Hindu. They are from Mint. They are from Financial Express. They are from other newspapers. Okay. If NBFCs don't take deposits, then registration of RBI is required. They will have to get certificate of registration from RBI. Okay. Any other question? Can we take a break now? Okay, let's take a break now. Okay, let's take a break. Time is 7:17. I'll start at 7:30. We'll restart the discussion at 7:30. Okay. Okay, welcome back. Good evening, everyone. Welcome back. Am I audible? Am I audible? Can we continue? Okay, let's start. So we are discussing NBFC, non-banking financial companies, right? So far, what we have discussed is what's a basic idea, definition of NBFC, who will regulate the NBFCs, what is the difference between NBFC and a bank. Now, let me add one more current affairs point here. The concept of scale based regulation. Scale based regulation, SBR. Now, what is this idea of a scale based regulation? Point number one, NBFCs are investing in the market. NBFCs are investing in the market. NBFCs are borrowing money from the investors. NBFCs are providing loans, etc. Any difficulty here? NBFCs are collecting deposits from the people. NBFCs are giving loans. NBFCs are issuing bonds, other instruments in the market, etc. etc. So RBI says NBFCs also play a very important role in the financial system. Any problem in understanding this statement? They also play a very important role in the financial system. Just for example, just like a bank will do. Banks are part of financial system in India. NBFCs, which are involved in different activities like this, are also important part of the financial system. For banking sector, we have got a lot of regulations. Any problem here? For banking sector, we have lot of regulations and was imposed these regulations, Reserve Bank of India. And on the other side, NBFCs, we do not have a uniform regulation, different regulators are there. Now, don't you think on one side, banking sector, we are having regulations, but the same level of regulations, that is a stringent, strict level of regulations, are not there in the NBFCs. And that is the precise reason what RBI has done is, it has introduced a new system called as scale-based regulation. SBR, scale-based regulation. Now, before going forward, let me ask you a very simple question. Very simple question, by the way. Here is, let's say, NBFC 1, which has collected a deposit of, let's say, 100 crore rupees. And here is another NBFC, which has collected, let's say, deposit of 5,000 crore rupees. A simple question to all of you. How many of you think that regulations should be same for both of them? That is question number one. How many of you think that regulations for both of them should be same? Of course, no. Is it okay? I'm asking you second question now. Regulations should be more strict, more stringent for NBFC 2 compared to NBFC 1. As a regulator, you should have more strict regulations on NBFC 2 compared to NBFC 1. That is the whole idea of scale-based regulation. Now, in the books, or it is not there in the books, I know that. When you're reading, right, let's say somewhere else regarding a scale-based regulation, for NBFCs, they will make a representation like this. They will have a representation of pyramid structure. Right? They'll simply give it in the form of a pyramid structure. And they will divide the pyramid into 4 parts. They'll simply divide the pyramid into 4 parts like this. That is, they will call this as upper layer. They'll refer to this as upper layer. This has to be a middle layer. This has to be a middle layer, and the third one is a base layer. The third one is, right, the base layer. And this one is the top layer. This one is the top layer. Now, if I simply number them, right, let's say base layer will be 1, middle layer will be 2, upper layer will be 3, and top layer will be 4. Now, simply look at the picture, right? Don't buy it everything. Simply look at the picture and tell me based on this picture, is it okay if I say the number of NBFCs which are there in the base layer will be very high? Let me know. Right, the number of NBFCs, again, just look at the picture. Right, why? The base is very broad. Base is very, very big. Right, so if I start placing the NBFCs which are there in the base layer will be very, very high. Right, and that's a precise reason more than 95% of the NBFCs will be classified under the base layer itself. But what kind of NBFCs will be kept in the base layer? Please have a look at this. The non-deposit taking NBFCs. The non-deposit taking NBFCs with asset size of less than 1000 crore rupees will be kept in the base layer. Middle layer, all deposit taking NBFCs, non-deposit taking NBFCs with asset size of more than 1000 crore will be kept in the middle layer. Upper layer. Now, what is the basic idea of upper layer? Let's say, I'll just give a very simple example. Let's say there are 500 NBFCs. Just a hypothetical example, because the number of NBFCs in case of India are around 10,000. Don't worry. Imagine there are 500 NBFCs. Now, if I arrange all the 500 NBFCs, I'll ask you the same question. Should we have the regulation same for all of them? Don't you think some of these NBFCs, which are very large NBFCs, let's say around 25. In fact, the RBI document says around 25 to 30. There are some NBFCs which are very, very large size NBFCs, right? And these NBFCs should be having more stringent regulations, should be having more strict regulations. And that is where all these NBFCs which are there in the middle layer, we will take top 25 to 30 NBFCs, will move them above the middle layer, that is called as upper layer. NBFCs which are identified by RBI, which require more regulatory requirement. On these NBFCs, you will have to have more regulations. And that is basically the upper layer NBFC. And have a look at this. Right, there is a top layer. Right now, RBI says there will be no NBFC in the top layer. I'll repeat it. There is no NBFC in the top layer. Right? Why? Right? Let's take a very simple example. You are the RBI governor, and right now you have identified 25 NBFCs, and you have very, very strict guidelines, regulations on these NBFCs. And what is your argument? NBFCs are also very important for the financial system. We should not allow the NBFCs to misuse the deposits. We should not allow the NBFCs to make wrong investments in the market. We should not allow the NBFCs to close and make losses for the customers, etc. That is your argument. But despite having very strict guidelines, very stringent regulations on the upper layer, even then, what if some of the NBFCs will fail? What if some of the NBFCs will continue to incur losses? And that is the reason RBI says the most strict regulations will be on the upper layer. But even then, if I feel that some of the NBFCs should be regulated much more, right? We should regulate it much more. Then move these NBFCs from the upper layer to the top layer. Right? That is the reason right now the top layer has been kept empty. More than 95% of the NBFCs are there in the base layer. Some of these NBFCs, which are, have a look at this, deposit taking NBFCs and non-deposit taking NBFCs, which have assets of more than 1000 crore rupees, will be kept in the middle layer. And the top 25 to 30 NBFCs in terms of asset sizes will be kept in the upper layer. And right now, nobody or no NBFC is there in the top layer. If required in the future, we will also have NBFCs is shifted to the top layer. And the idea is very simple. As you keep on moving from the bottom to the top, right? Let me ask you this, then I'll give the answer. If you're moving from the bottom to top, what will happen to regulations? Will the regulations become more strict or more relaxed? Will the regulations increase or decrease? Right, the regulations will start increasing more and more. For example, sir, what kind of regulation are you talking about? There is a term called as concentration risk. All these are very, very technical, but understand the idea here. There is a term called as concentration risk. What is the meaning of the term concentration risk? Here is an NBFC. Imagine the NBFC is giving a loan. What would you prefer? Example 1, where NBFC will give loan only to one customer. Example 2, NBFC, same 100 crore rupees, will provide it in the form of loan to 10 customers. Tell me now, you are the RBI governor. You are the RBI governor. You tell me which one would you prefer, example 1 or example 2? Right, example 2 is example 1. How? Right, very, very, this is right. I don't have words to explain it now. You are the RBI governor. You will prefer the NBFC giving the loan of 100 crore only to one customer. My dear, what if this company incurs a loss? You tell me. What if this company incurs a loss? Don't you think you are taking a very high amount of a risk? That is the reason there is a condition called as concentration risk. And the idea of a concentration risk will define per customer what is the maximum percentage in terms of value. What is the maximum value you are allowed to provide? And within one industry, how much is the maximum allowed value of loans you are supposed to provide? That is called as a concentration risk. Right? And as you keep on moving to the top like this, how much capital you should maintain, right? The numbers will change. The concentration risk numbers will also keep on changing. Again, all these are very technical. You don't have to by heart everything. But does it make sense to you? When I say, as you move from the bottom to the top, the conditions or the regulations will keep on increasing. And the RBI simply says there is a reason why I'm doing this. Just like banks, we also need to regulate NBFCs. If I do not regulate the NBFCs in a very strict manner, there could be losses incurred by the customers. There could be higher risk taken by the NBFCs, and any losses that they will incur, they will shut down, then the investors will face the risk there. That is basically the idea of a NBFC scale-based regulation. Can I go to the next one here? Can I go to the next one? Again, some of you, I don't understand. Generally, I don't understand. Why do you want to learn everything? For example, I used Companies Act. I used a term called as Companies Act. Right? Again, I don't want to take anybody's name. That is not the agenda of the class. Some of the students ask me, sir, what is discussed in the Companies Act? Now, my question to you is, I can discuss. Companies Act is, right, not very small, my dear. It's not very small. I can discuss Companies Act because I've learned it. But you tell me, will UPSC ask you a question on Companies Act provisions? Just think of it. Just think of it. Will UPSC ask you provisions in the Companies Act? Right? Absolutely no. And some of you will simply say, what if they will ask? This is a very interesting question that the students will ask. What if UPSC will ask? Then, my dear, you tell me, what is your threshold of preparing for UPSC in economics? Right? Let me know. Where will you say, this is sufficient? I'll stop here. What is your threshold? Do you think 1 year is sufficient to learn everything in economics? Let me see. 1 year is sufficient. 2 years is sufficient. 3 years is sufficient. So tell me, what is the point where you will simply say, yes, this is sufficient? So understand, right? Understand. Don't do PhD. Don't do PhD. That is not required. Right? Some of you will simply say, sir, what if that question is asked? My dear, then you will have to read everything in economy. And that is not possible. Don't waste your time. Out of concern, I'm telling you this. Okay, let's start. Now, what is the importance of NBFC? Right? What is the importance of NBFC? What is the importance? Many of you are asking, banks are already there. Why should we need NBFCs? These are the reasons. Point number one, you go to a bank, you want to apply for a loan, the bank will ask for a security. Right? The bank will ask for a security. Tell me, if you do not have any security, will the bank prefer to give you loan? Again, I'm not saying they will not give, but will the bank prefer to give you loan? Most of the bank managers will say, sorry, sir, give me security. Second example, you will go to a bank, you have security, you want to apply for loan, bank will check what is your CIBIL score. Bank will simply check what is your CIBIL score. And the bank will realize you have got a very, very low CIBIL score, 300, 400. Now you tell me, as a bank manager, will you provide loan to such a borrower? Right? You will simply say no. Right? No, this is very, very difficult. Right? Very, very difficult, because your CIBIL score is very, very low. Now that is where NBFCs will come. That is where the non-banking financial companies will help you out. NBFCs will simply say, yes, right, your CIBIL score is lesser, I will give you loan. You do not have any security, I will give you loan. And before you start asking why they will give, please understand a very simple idea. By giving loan to you, is the NBFC taking a higher risk or not? Yes. And with the higher risk, will they charge you a lower rate of interest? No, they will charge you a higher rate of interest. Very simple. Right? So they will give you loans, they will provide the services to you, but right, they will start charging higher rate of interest. So one, NBFCs will provide loans to those borrowers who will not be able to get loans from the bank, or those borrowers who are generally assumed to be very, very risky by the bank. Many of the NBFCs are specialized in giving loans to specific sectors. For example, right, there are many NBFCs which will provide loans only in housing sector. Only in housing sector, NBFCs are specialized. They will give loans only in the housing sector. There are NBFCs which are specialized in giving gold loans. Right? Any example? Gold loans, Manappuram. Right? There are many companies. Right? Housing sector. Have you heard of Bajaj? Right? Bajaj is involved in housing sector loans. India Bulls, it is involved in housing sector loans. So there are specialized institutes, specialized NBFCs, right, to provide loans to a specific sector. Unlike a bank, banks will provide loans to everyone, but in NBFCs, specialized institutes are there. Okay, unbanked borrowers can become bank borrowers. How? Let me start. I will come to you. You are a bank. I want to take loan from you. You will look at my CIBIL score. CIBIL score is very less. And you, as a credit manager, you will simply say, sorry, risk is very high, I will not give you loan. Now what I'll do, I will go to the NBFC, take a loan from the NBFC and make prompt repayment. I will repay the loan. Now when I repay the loan, what will happen to my CIBIL score? Tell me, very simple. When I promptly repay the loan, what will happen to my CIBIL score? Will it remain same? No, automatically it will start improving. Now, when the CIBIL score improves, can I take the new CIBIL score with collateral? Next time, can I take loan from a bank? Will it help me or not? Right? The unbanked borrowers can be made as a bank borrowers, right, with the help of NBFCs. These have been helpful in creating demand as well as capital formation. For example, NBFCs will provide loans for infrastructure development. NBFCs will provide loans for tractor purchases. NBFCs will provide loans for gold. NBFCs will provide loans for housing. Now, by providing loans, are they not creating demand in the market or not? Otherwise, even now, if you feel no, sir, that is not possible, let me give a very simple example. Many of you would have gone to, let's say, a store by the name of, let's say, Chroma, Tata Chroma. Have you been here? Or you might have gone to Reliance stores. And if you observe it very carefully, what they will do is the Bajaj Capital or Aditya Capital, etc., those companies' representatives will be there in the same store. You want to purchase a mobile phone, cost of the mobile phone is, let's say, 60,000. You're basically in two minds. 60,000 at very high price. One time I'll not be able to make a payment, etc., etc. Then suddenly the salesperson will give you one option, right? If I'm pretty sure most of you have experienced it, right? The salesperson will simply say, sir, if you want, you can go for EMI. Yes or no? Right? They'll simply say, if you want, you can opt for EMI. Right? And basically they'll say 0% EMI or no cost EMI, no charges for it. Right now, within 15 minutes, we'll process it. What are they doing? NBFCs are promoting consumption. NBFCs are creating demand and helping capital formation in the market. Right? Any problem in understanding the importance now? Any problem, please do let me know. This is the importance. This is the importance of NBFCs in the market. Okay. Now, what are the issues? First point, what is their profit? My dear, right, when they provide loans to you, of course, again, not only mobile phone, I'm talking about generally, NBFCs will charge rate of interest, right? NBFCs will charge rate of interest, okay? First point, the banks, if your credit score is very low, if you do not have collateral, banks will not provide loans to you, but NBFCs will provide, okay? Done. So what are the issues faced by the NBFCs? What are the concerns related to NBFCs? First one, funding issue. Right? NBFCs, understand this carefully. NBFCs will provide loans. NBFCs will invest, etc. But from where will the NBFCs actually get money? They will borrow. One source is a bank. One source is a bank. They will borrow from bank. They will also collect deposits in the form of term deposits. They will also issue various instruments and borrow from the market. They will borrow from the market. There's a technical term called as commercial paper. Not today. We'll discuss it when I take a financial market. A simple question to all of you. When the pandemic hit, last 2 years, when the pandemic hit, do you think banks will be able to provide more and more loans to NBFCs? Will people, right, keep deposits with NBFCs? Will the NBFCs go to the market and will they be able to borrow? Very simple idea. Answer is no. So the source of funding, NBFCs, from the source where they used to raise money, collect the money and give the loans, invest in the market, that source itself, the funding source went down. And now tell me, if the source goes down, what will happen to the loans issued by them? What will happen to the investments done by them? Automatically, don't you think, right, the impact will be, that will also reduce, right? So the funding issue, right, is one of the problems facing NBFCs. Because of the slowdown and recession, they have been facing even the repayment issues. That is, let's say a farmer has taken a loan or a person has taken housing loan from the NBFC. The pandemic hit, the person has been removed from the job. Don't you think the repayment will also be affected? Just like a bank, by the way. Just like a bank. Will the repayment be affected? Of course, yes. If I'm the borrower, you are the NBFC who has given loan to me. I've been thrown out of my job. I don't have the source of income. I'll not be able to repay it. Right? So automatically, right, the repayment, right, also has been affected. Asset liability mismatch. Did we discuss in the bank concept? Right, let me know. Did we discuss the concept of asset liability mismatch in banking? Can you apply the same thing to NBFCs? Will the same thing be applicable to NBFCs or not? They are collecting at different tenures. They are giving loans at different tenures. That's a problem. Credit issuance also has slowed down because of the funding issue. Right, so these are some of the issues which the NBFCs are facing currently. Right, most of these are because of the pandemic. Okay, so this is the discussion regarding the NBFCs, non-banking financial companies. So that's the end of the discussion for you. The chapter is very big, very important, and as far as I'm concerned, I've taken multiple concepts which are there from different areas. For example, IBC. You'll not come across the concept of IBC under the chapter of banking in the book. They will not cover anywhere also. But when you talk about the banking sector, one issue, that is NPA, you'll have to discuss IBC. Right, payment banks, right, small finance bank, cooperative bank. A lot of these concepts are in NABFID. Right, or for that matter, yesterday also we have discussed one more current affairs, NARCL. Right, I've incorporated a lot of current affairs so that it will help you in understanding this chapter comprehensively. Right, and this is very, very important, by the way. Okay, done. What is the funding issue in NBFC? I'll repeat it again. Your NBFC, you want to give a loan, but from where will you get the money? You will take loan from a bank. You will borrow from the market. You will collect deposits from the customers. But because of the pandemic, the banks giving loans to NBFCs has gone down. Depositors purchasing the deposits, that is the term deposits of NBFCs, has gone down. As a result of this, the source of funds for NBFCs has gone down. It has also affected the lending activity of NBFCs. Difference between middle layer and base layer. I'll repeat it again. Middle layer, those deposit taking NBFCs will keep it in the middle layer. And non-deposit taking NBFCs, which have asset size of more than 1,000 crores, will keep it in the middle layer. But there are certain NBFCs, the top 25 to 30 NBFCs, which require more regulation. So the top 25 to 30 NBFCs where more regulation should be there, we will simply keep them in the upper layer. Okay, done. Okay, so these are the various points. My recommendation, revise them, revise them, revise them. Simple, please revise them. Now, will you be able to solve at least some of the questions which have come in the UPSC examination, the day for yesterday's UPSC examination, using the concepts that we have discussed? Let me know. And that is where, right, you will have to evaluate everything. What you are learning, is it helpful? Will you be able to solve the question papers or not? For example, right, I'll tell you examples. There was one question on loans given to MSME sector. Did we discuss that in this chapter? Please tell me. Loans given to the MSME sector, did we discuss that concept in this chapter? That is PSL, Priority Sector Lending. Now check whether there was a question asked on this or not. Please check it. Right. Second, I'll tell you there was one more question. Across the globe, the central bankers have increased interest rates. And one more statement. Second statement was, this is because the central bankers believe that they'll be able to control inflation by increasing interest rates. Please tell me, did we discuss the same thing or not? Let me know. Did we discuss the same thing or not? Right? We have discussed all of it. So again, understand, you might simply say, sir, the term was different. Statement was different. Not worry about it. But can you apply what you have learned in solving the question paper or not? That is very much relevant. Regarding RBI, there was one more question. I have not discussed the term. We'll discuss it later. There was a term called as sterilization. We'll discuss it. Right? We'll have a discussion regarding that. Please don't worry. right? The only reason I've not introduced the term sterilization here is, first you will have to understand exchange rate, right? First you will have to understand what is the idea of exchange rate. Only then you will understand why RBI goes for sterilization. We'll discuss that as well. So again, my argument is very simple, right? And please remember this. You might hate me for it. You will find it very difficult to solve all the questions on economy. I hope you understand, right? I don't expect anybody in the exam to solve all the 14 questions that are asked. Why? I'm only saying there will be one or two questions which will be completely out of whatever you have studied, right? That is a fact. So your target should not be 14 out of 14. Your target should be 80% of the questions. Your target should be, at least in economics, 80% of the questions. And trust me, if you are able to solve 80% of the questions, your understanding, conceptual knowledge is very, very good, right? That's an indication. Okay, now let's solve the previous year questions. Then we can have a discussion of other chapter. Okay, let's solve. 47% have answered correctly, but it should be higher. This is where application, knowledge, concept becomes very crucial. Money multiplier in an economy increases with which one of the following? Increase in the cash reserve ratio of the banks. You please tell me. If the CRR increases, will the money supply in the economy increase? Think of it and let me know. If CRR increases, will M3 increase? I hope you understand what I'm directly talking about. M3 will not increase. If M3 will not increase, will the money multiplier increase? No. Any difficulty here? A is wrong. In the same way, can also say B is wrong. Same idea, right? If SLR increases, will the money supply in the economy increase? No, it will not increase, right? So second one is also wrong. But look at the third statement. Increasing banking habit of the people. If the people inculcate more and more banking habit, what is the meaning of the term banking habit? People will start depositing more money in the banks. People will start conducting more and more transactions with the banks. Will the money supply in the economy increase or not? Automatically, it increases. So the right option for the question will be option C here. Option C is the right one. Increase in the population of the country? No. Right? If the population increases, right? If the population increases, no, automatically it doesn't mean multiplier will increase. Now, same thing, right? Have a look at this, same thing. UPC, what they've done is to increase the complexity in the question. Same thing, they will write it like this. Again, option has changed, but the conceptual clarity, if it is there, you will be able to solve it. Instead of giving it like this, what UPC will do is, they will number it 1, 2, 3, and 4. And now they'll start playing with your emotions, right? They'll say only 1 is correct. Only 2 are correct. Only 3 are correct. And all the 4 are correct. Right? As no, only issue here is, again, please understand, be very clear in terms of concepts. Right? You cannot use elimination method here, but if your concepts are very much clear, doesn't matter. You'll simply go with option C here. You simply go with option C and say, Sir, right option is option A if these were the options. Done. Again, practice. Right? If your concepts are very clear, doesn't matter what kind of option he will give you. Second question. Okay, let's start. 44% have answered correctly. Why? Why, my dear? Let's start. In India, central banks function as the lender of last resort usually refers to which of the following? Let's start. Lending to trade and industry bodies when they fail to borrow from other sources. Please tell me, we have spent around four classes on banking, and one class or 1.5 class, I believe, we have spent on RBI. Anywhere did I say that RBI will give loans to companies? Think of it. Anywhere, any tool that I've mentioned? Absolutely no. Why? RBI will never deal with companies directly. RBI will never deal with us directly. It has to be through banks only. Right? So first statement is wrong on the face of it. You don't have to have any confusion. RBI will never deal with the companies directly. Second one, providing liquidity to the banks having temporary crisis. Yes or no? Right? For example, I told you there's a tool called as marginal standing facility. In fact, I've written all of this. There's a tool called as repo. Can a bank which requires money, emergency, there is an emergency, the bank requires money, can they approach RBI and borrow from RBI? Answer is yes, by the way. Right? And is the second statement the same thing? Right? Don't you think because of this only, RBI is referred to as bank of last resort? Bank of last resort. That is the last right source from where you can get the loan for a bank is Reserve Bank of India. Right? So second statement is correct. Lending to governments to finance budgetary deficit. Please tell me now. Right? Are we following a system where government of India will sell the bond to RBI and RBI will give money to government of India? Think of it. I've explained this also. Right? Are we following a system where government of India will sell the bond to RBI and RBI will give money to government of India? No. Absolutely no. I've told you all of this. Right? What is practiced right now? Government of India will hand over the bonds to RBI. RBI will sell them in the market and transfer the money into the bank account. Right? Transfer the money into the bank account. We do not follow the method where government of India will sell bonds to RBI. We do not follow this. In fact, I told you the reason as well. That will lead to more inflationary trend in the economy. So this is not allowed. But are there any exceptions? Is there any exception here? Exception is there. That is not normal. I hope you understand the term exception and a normal. Is there any exception? Tomorrow when I start discussing fiscal policy, that is budgeting in India, I will tell you there is exception, but that is not normal. For example, today government of India cannot directly go to RBI, sell the bonds to RBI and borrow from RBI. No, it is not allowed. Right? There are certain exceptions. Right? I'll tell you what exceptions tomorrow. Don't worry. Okay. So lending to the government to finance budgetary deficit, no. To bridge the deficit, no. RBI doesn't give loans to government of India. Right? So second one is correct. Right option for the question will be option B here. Done. Next one. Okay, 53% have answered correctly. Why? It should be more than that. The governor of Reserve Bank of India is appointed by the central government. Any problem with statement 1? Straightforward, correct. Second, certain provisions of Constitution of India give the central government the right to issue directions to RBI in public interest. Correct? No. Absolutely no. Right? In fact, I've given you a list of certain sections. Sections under RBI Act. One of the section, right? One of the section will give the power to the government to issue direction to RBI in public interest. But is it part of the Constitution? Think of it. Is it part of the Constitution? No. Again, you can use elimination, but I'll not use it because now you know what UPSC is doing. The governor of RBI draws the powers from the RBI Act. Statement 3 straightforward, correct. Okay, straightforward, correct. Right, so 1 and 3 are correct. Right option is option C. Again, please understand, can I increase the difficulty here? Instead of these options, again I'll play, right, like this. Only 1 is correct. Only 2 are correct. 3 are correct. None of them are correct. Automatically the difficulty level will increase. You cannot use elimination. Automatically the difficulty level will increase. And that is what UPSC is doing now. Let's start. Okay, right. So 39% have answered correctly. Let's start. With reference to urban cooperative banks in India, consider the following statements. They are supervised and regulated by local boards set up by state governments. Simple question to all of you. Will RBI regulate cooperative banks with new changes introduced by Government of India, or it will be the state boards which will regulate the cooperative banks? I'll repeat the statement again. We have discussed all of this, by the way. Will RBI have the regulatory power over the cooperative banks, or right, the state boards which will have the power over cooperative banks? It is RBI. That is the new power which has been given, right? New powers with amendment in 2020. They can issue equity shares and preference shares. I have not used the specific terms in the slide, but I think I've given it in the bracket. But statement is correct, right? By the Government of India's amendment in 2020, now they are allowed to issue both preference and equity. Now, please do not worry about what is equity and preference. Some of you are from the background, don't worry. We will discuss this. I promise you, we will discuss what is the basic idea for equity and preference, right? Just give me some days. There's a chapter called as financial market. We'll discuss everything. We'll discuss everything. Have patience. They were brought under the purview of Banking Regulation Act 1949 by amending in 1966. This is a straightforward static question, right? Correct. So 2 and 3 are correct. Right option will be option B, 2 and 3 only. Okay. Next one. Okay, 51% have answered correctly. Why? It should be more, right? To combat demand side inflation, which of the following activities would be preferred by RBI? And the key term is controlling or combating demand side inflation. Right? I hope you remember this. There is a supply side, there's a demand side. Question is on demand side. You'll have to reduce the demand. And can you reduce the demand by reducing money supply in the economy? Please do let me know. Can you reduce the demand by reducing money supply in the economy or not? Answer is yes, by the way. Right? Now, first, buy government securities. If RBI will purchase government securities, will money supply come down or increase? You tell me. Money supply increases. So, will you be able to control demand? No. Second, increasing repo rate. If RBI increases a repo rate, will the money supply come down? Will it have an impact on increasing interest rates? Simple idea. Here is RBI. RBI will give loan to a bank. Bank will give loan to a customer. If RBI increases the rate of interest, that is a repo rate, what the bank will do? Bank will automatically increase rate of interest. Now, if the bank is going to increase rate of interest, people will take more loans. Will the money supply increase? Right? Will demand increase? No, it will come down. Second one is correct. Third one, print more currency. If RBI is printing and issuing more currency, right, will the money supply increase or decrease? Money supply increases. Right? Can you control inflation? No, it will cause inflation. And finally, reduce SLR. Reduce SLR. If RBI will reduce SLR, right, tell me whether this is correct or not. Bank will have more money to give loans. And the loan supplied by the bank, credit issued by the bank will increase, causing demand pull inflation. Any problem in this? If RBI will reduce SLR, it will cause inflation, not control. Right? Fourth one is wrong. Right? So only two is correct. Right option is option B. Can I go to the next one here? Okay. Arey Baba, why? 34%. One third of you have answered correctly. In the context of Indian economy, which of the following is or are the purpose or purposes of statutory reserve requirements? Do you remember the statutory reserve requirements we have discussed? CRR and SLR. Correct or not? CRR and SLR. What is the use of both CRR and SLR? One, right? Basically, RBI will collect the CRR deposits and will ask the bank to keep certain deposit with itself. Can we say that by adjusting CRR and SLR, RBI will be able to control how much loans are issued by the bank? Let me know. How much loans are issued by the bank can RBI control? Yes. To enable the central bank to control amount of advances bank can create. Point number two, by having these kind of statutory reserve requirement, don't you think RBI is also ensuring that the deposits of the people with the bank are safe as well as liquid? Safe as well as liquid. Meaning what? Tell me SLR. In case of SLR, you'll have to keep it in the form of cash. You'll have to keep it in the form of gold. You'll have to keep it in the form of government securities. Can you convert this into money very quickly or not? Cash is already there in the money form. Can you convert government securities very quickly in the money form or not? And in fact, I've told you, right, whatever you keep in the government securities, it is also counted as a part of the liquidity coverage ratio under the Basel III. So is it not helpful in making the people's deposit safe as well as liquid in the bank? Right, so second statement is correct. So 1 and 2 are correct. Right option will be option B, 1 and 2. Okay. Next one. Slightly tricky. Be careful. Slightly tricky. Okay. Right. Half of you have answered correctly. Right. I'm happy. Others, listen to this very carefully. Which of the following measures would result in increase in the money supply in the economy? Now, can I simply say increase in money supply means we are measuring M3? Let me know. We are simply looking at M3. If M3 increases, automatically we'll say yes, this will lead to increase in M3. Let's start. Purchase of government securities from the public by the central bank. If the central bank will purchase government securities, imagine you have the government securities, right? RBI governor will give you 100 rupee, take away the government security from you. Simple question, will it increase the money supply or not? Let me know, will it increase the money supply in the economy or not? First one is correct. Any difficulty? Deposit of currency in commercial banks by the public. Very, very tricky. Please be very careful with this. Be very careful. In fact, second statement, I'll show it, was asked as a separate question by UPSC. I'll show the question also, have patience. Many of you believe that depositing currency by the people in the bank will increase money supply. But please understand, immediately it will never happen. Immediately it will never happen. Right? I'll tell you what they're trying to convey here. Depositing currency in a commercial bank by the public. Let's take a very simple example. Right? Do you remember the formula for M3? Right? Understand this. Do you remember the formula for M3? What was the formula for M3? Can I write it simple like this? The cash that is held by the public plus the time deposits plus demand deposits. Right? What is M3? Cash held by the public plus time deposits plus demand deposit. That's a basic idea for M3. Now I'll give you a simple calculation. You tell me whether the money supply is changing or not. Imagine the cash is there 500. Time deposits are, right, let's say another 500. Demand deposits are, let's say 600 rupees. So total money supply in the economy, M3 will be how much? M3 will be 1600 rupees. Done? Simple calculation. 1600. Now what the second statement says is depositing, right, the money by the people in the bank. Now let's say out of 500, you will take 100 rupee, you will keep 100 rupee as a fixed deposit in the bank. I'll repeat. You have 500, you will take 100 rupee out of it, go to the bank and keep 100 rupee in the form of a fixed deposit. Cash will come down to 500. Time deposit, earlier it was 500, 100 rupee your money, it will become 600. Demand deposit does not change, remains 600. Now please tell me, is M3 changing here? Let me know. Is M3 changing here? Right? So when you keep deposit in the bank, your assumption is bank will give loans, etc., etc. But are they saying the bank is going to give loan here? They are simply saying you will deposit money in the bank. Will the money supply increase? Answer is no. Is it okay? So second statement is wrong. Borrowing by the government from the central bank. If the government will borrow from the central bank, what will happen to money supply? Money supply will increase. Money supply will increase. Sale of government securities to the public by the central bank. Exactly opposite to the first one, wrong. So 1 and 3 are correct. Right option will be option C. Now let me show you a very simple question. Right, I'll come back to this, don't worry. Solve this very quickly. Just a second. Some of you are saying, sir, option is wrong. My dear, 1 and 3 are correct. Obviously, option C will be correct. Solve this question very quickly, then we'll stop the discussion. I'll not start the poll. Right? If you have understood what I would explain now, this will be the straightforward question for you. If you withdraw 1 lakh rupees in cash from your demand deposit account at your bank, the immediate effect on the aggregate money supply in the economy will be. Any difficulty now? Or some of you are saying 1 lakh rupees increases by 1 lakh. So what I've discussed just now, you already forgotten. Right? What I've discussed just now, you already forgotten. Right? So if you withdraw 1 lakh rupees cash from the account, the deposit amount will come down by 1 lakh. Cash held by the public will increase by 1 lakh. So M3 will still remain same. Right option is option D here. Okay? Right? So right option will be option D. This is where I keep on asking you people, focus on the concepts. Do not buy out calculations. Do not buy out formula. Focus on the concepts. Done? So let me stop the discussion here. Couple of more questions are there. We'll solve the questions tomorrow. Don't worry. Right? 3 or 4 more questions are there. We'll solve the questions tomorrow. And again, whatever we have discussed, they have asked based on that only. Okay. So now, if you have any other questions, please do let me know so that we can wind up the discussion for the day. There is one question: is NABFID a statutory body? It is a statutory authority. Right? Government of India passed an act, NABFID Act. Under that, we have established NABFID. Is a statutory authority? Yes. In previous questions, you explained RBI is not buying government bonds. So statement 1 will become incorrect. Results to option B. Now, whenever I say RBI will not buy bonds, please understand this is what I'm talking about. I'll write it. In fact, if you have downloaded annotated PPTs, this is what you will see. Follow this very carefully. Those who are having still the doubt, here is the Government of India. Government of India will give the bond to RBI. RBI will sell the bond. Sell bond to the investor. Collect money from the investor and transfer money to Government of India into the account of Government of India. This is allowed. Done? This is allowed. On the other side, I will change the marker color automatically red, which means not allowed. Government of India, normally, again tomorrow I'll tell you there are exceptions. Government of India during normal times will not be allowed to sell bonds to RBI, and RBI will not pay money to Government of India. This is not allowed. This is not allowed. But I'll give you one more statement. Right? Tomorrow I'll tell you about this. I'll give you one more statement. Is Government of India allowed to borrow from RBI? Understand this carefully. Is Government of India allowed to borrow from RBI? There is a tool. There's a tool called as Ways and Means Advances. Ways and Means Advances. There's a tool called as Ways and Means Advances. Under the Ways and Means Advances, WMA, under the Ways and Means Advances, either the state government or the central government, they are allowed to borrow from RBI for very, very short duration. Is it okay? Let me know. Under the Ways and Means Advances, Government of India or the state governments, they are allowed to borrow from RBI but for a very, very short duration, right? What is the duration? Duration of 90 days. That is called as ways and means advances. This is allowed. This is allowed. Right? What is allowed? Number 1 is allowed. Number 3 is allowed. This is not allowed. This is no way allowed in India during normal times. There is one law, FRBM, which we'll discuss tomorrow. I'll prove under what exceptional circumstances this will also be allowed. Any difficulty now? Why can't Government of India directly sell bonds in the market? Now you tell me, do you think Government of India has the expertise? Do you think Government of India has the infrastructure to sell, to purchase bonds directly from market? Think of it. Right? Do you think the Government of India has the required infrastructure for that? Right? Answer is no, by the way. Okay. That's the reason Government of India has an agreement with RBI where RBI will facilitate all of this. Meaning of deposit taking NBFC and other NBFC is not clear. My dear, there is one NBFC which will collect deposits from you. Right? There are various NBFCs which will collect term deposits from you. Right? 12 months to 60 months. Right? Those kind of deposits, right, which are issued by the NBFCs, they collect the money. These are called as, right, the deposit taking NBFCs. Whereas there are other NBFCs also which will not collect any deposit from the people, from the investors. Those are called as non-deposit taking NBFCs. Okay. Will 1 pair, 2 pair and 3 pair make solving MCQs harder? Of course, yes. If the questions are 1 pair, 2 pair, etc., slightly difficulty level will be higher. But again, if you're conceptually very clear, you don't have to be worried. According to Reliance example given by Sir, NBFC provides a 0% EMI. How they earn? My dear, charges for the processing is free. Many of the times they will have, right, a certain interest component. Even if the interest is not there, generally what they have done is they would have a tie-up with the supplier, seller company, thereby making margins, right, through that kind of an arrangement. Sir, can NBFC be instrumental for overturning life of people in the slums? Again, right, I don't think so. Any NBFC has done such a service to the society as of now. But if they've done it, yes, the possibility is there. But will they take such a huge amount of risk? Is one NBFC provide loan on every sector? Generally, you will not find those kind of NBFCs. Most of the NBFCs that we have are specialized. For example, I said Muthoot Finance. Muthoot Finance is specialized in one sector, right? There is a DHFL. It is specialized in housing loans. India Bulls specialized in housing loans, right? There are these kind of segmented NBFCs. As we move from bottom to top, concentration increase or decreases? It is not concentration increase or decreasing. The conditions related to concentration. Are we allowed to lend up to 20% to single borrower, up to 40% to the group borrower? These kind of conditions will keep on changing. Okay, done. Will government borrow from RBI increases money supply? Of course, yes. Right, reason is very simple. Government of India, if they borrow from RBI, they will not keep the money with themselves. They'll spend the money in the market. So money supply increases. We need to follow financial newspaper editorial part only or full newspaper? It will vary from one day's newspaper to another day's newspaper. My argument is go by based on the articles. Go based on the article. For example, today I said there was a very good article in a Financial Express newspaper which spoke about can we replace the digital vehicle, the diesel vehicles with the electric vehicle. That's a very, very important article for you. So you cannot have a simple black and white answer for this. It depends on the kind of article mentioned there. Okay. Repeat last point of NBFC. What was the last point of NBFC? Please tell me what is the point. Right, rather than me running right through all of this. Okay, the credit issuance also has come down. Basically, the NBFCs are unable to raise a sufficient amount of credit or sufficient amount of funds, right? The NPAs also have increased. Pandemic has affected us. Their activities, lending activities, also have come down. Any other questions? Any other questions? It is very difficult to us to judge what is very important in financial newspaper, my dear. Right? Understand the logic here. If there is an article regarding, let's say, the details of economy, right? For example, there will be articles where they'll speak about macroeconomy, right? Macroeconomic numbers. Do you need to understand all of that? Of course, right? So basically, you need to look at the article and see, okay, let's say this is discussing RBS function. This is discussing regarding policy of government of India. Right? In those kind of articles, automatically read it. Right? The problem is very simple. You think there is a formula. You believe that in your mind, you believe that there's a formula. That is, let's say, there's a formula like a plus b whole square, which will give you a square plus b square plus 2ab. You are expecting for this formula. Tell me exactly how to do this. A plus b whole square written anyway will be only this. In economics articles finding, there is no formula like this. You'll have to look at the article, right? Look at what they're discussing. Based on that, take a call. Okay, again, some of you start focusing on the formula and right, start asking me mathematics optional now. Done. Okay, so let's stop the discussion today here. Let's stop the discussion here today. Some of the questions, right? I believe 3 more questions are left out. We'll solve those questions. And trust me, you can check it also. No descriptive question has come from the banking chapter in the last 5 years. Please check it. They have not come. So MCQs have come. We'll discuss. We'll finish. We'll go to the next chapter tomorrow. Okay. So that's it from my side. Take care. See you tomorrow again sharp at 5 p.m. Good night.